Afternoon, everybody, and thanks for joining us for the Traders Exclusive Free Live Strategy Series. This is Sherry, your host, and today we are going to be learning how to become an expert in shorting by finding your niche. We're going to discover the #1 strategy for creating passive income monthly in the markets right now, and we're going to learn how to think like a professional trader. So when we're done, please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where we're going to find a recording of today's webinar. And before we get started, I have to share the quick disclaimer. Let's see if I can get her to move. There it is. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. I'd like you to take notes and write your questions down, but wait for the speaker to be done to ask them. Of course, Melissa, do you like to have your questions on the fly? Do you ask questions and wait for people to answer?
People can ask me questions on the fly. I'm totally fine with that.
All right, well then that means I'm going to create an organizer, create you in as an organizer as well as the presenter so that you can see the questions coming in. And then I just want you guys to know that our first speaker today is Melissa Armo of the Stock Swoosh. She's going to be talking to us about short stocks for fast profits. And she's the founder and owner of her own international educational company where she teaches people how to successfully trade the stock market. She owns the method she teaches and created, which is unique to the Stock Swoosh. The method is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. She's also the executive producer and creator of her own television show, which is titled Make a Million with Melissa. Make a Million with Melissa is a what to do and how to do it television show on stock trading. She also appears on TV as an expert stock market analyst, discussing the market, stocks, news, and world events on Fox News, Fox Business Network, RT America, Cheddar TV, and CBS News Corporation. I thank you so much for joining us, and I'm going to switch it over to you, my dear. I'm going to make you the presenter, and we will change you to an organizer.
Can you see the slide?
I do see your slide, yes. And now I'm going to mute myself, and you take it away.
Again, if you have questions, you can just plop them in the room and I can answer them for you. And it's a great day to talk about trading, to talk about shorts. I'm going to talk about gaps. I'm going to talk about institutional money as we go along today. And again, if you have any questions, you can email me at melissathestockswoosh.com or call me at 929-3200-GAP. You can also follow me on Twitter, Facebook, YouTube, or Skype. And again, as Sherry said, I appear on TV to talk about a lot of things, mostly things that have to do with what's going on right now in the market. And there's a lot of things going on in the market right now. The market's scared about Russia, Ukraine, interest rates. We're trying to rally them. We're failing. So every single day I get up and I'm trying to look for the best stock to trade. That's what I do. I do prefer to short. A lot of people come to me and they want to trade and they want to trade for a living and they feel like, well, can this be done? The fact is that you can make money trading and you can do this for a living. However, in order to be a professional trader and to be successful, you have to win more than you lose. And a lot of people don't, okay? So you have to focus on a set strategy that is a high winning strategy. Again, you've got to get more winners than losers. This is our stats, the results for the whole year, 2022. 605,054. This is with an average risk of 2,800. These were day trades. These were all day trades on margin, and most of these trades were shorts. There's a few longs that we did this year. Very, 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 very few. Most of the trades were shorts. I try to get out of the gate and do one thing a day and be done really quick in the first half hour of the day. So again, why people think, oh gosh, I've been trying to do this for so long. How do you become successful? Get a good strategy. That's point one, okay? Because you're gonna lose if you don't have a strategy. And if you're all over the place, like buying every dip, for example, in this market this year, you've lost, okay? You've had a losing year. People are still trying to do that. I can't even believe that people are actually still trying to do that, but they are. So it's about learning something that works, that's consistently working in any given market. And I say to people, if you're upset about what's going on right now in the economy, inflation, higher cost of things, food, gas, everything else that we're buying that we need to live, you've got to take it upon yourself to empower yourself today to do something to change your current economic situation. What can you do? You can find another job, or you can find extra money and decide to trade on the side and have income above and beyond your current job, okay? But many people find trading elusive. The success that they want, they always seem to almost be there, but then not quite. And a lot of it, again, like I said, has to do with the fact that they're not focusing on the right strategy. So what is a gap? We're going to talk about gaps today. That's my strategy. What is a gap? A gap is the difference between the close and the open. Simple. That's it, okay? But you can't trade every gap, okay? Excuse me. So not every gap is a good gap, or what I call a predictable gap. So take a look at this one here. The SPY closed here, gapped up, rallied. That was a week ago. So this was a bullish gap. What is this here? This is a bearish gap. Stock closed here, gapped down, fell. So we closed at one price at 4 o'clock and opened at a different price at 9:30. Closed at one price at 9:30, opened at a higher price at 4. So again, stocks have bearish gaps and bullish gaps. You can do both. Okay, I just happen to prefer to short, okay? And I'm going to talk about why in a little bit here. But again, having that daily strategy just allows you to be focused, like you're throwing a dart at a board to hit a bullseye. It's important in the morning to have no distractions. Got to turn your phone off. Don't look at the emails. You know, again, focus. Let's look at another chart here. It's the daily chart of Amazon. Again, what is a gap? A stock gaps when the closing price yesterday is different than the next day today. This is 4 o'clock. This is 9:30. We closed here, open lower, fell. Closed here, open lower, rally. So again, you can't short every bearish gap and you can't go long every bearish gap. You can't short every bearish gap and you can't go long every bearish gap either. So you're looking for the good ones. So in this case here, we fell. In this case here, we rallied. In this case here, we were up, rallied. See it? That was a week ago, week and a half, Amazon. So again, what is a gap? A stock gaps when the opening price today is different than the closing price of yesterday's trading. Simple. A gap is a break in price action from one day to the next. That's it. Simple. Okay? But what is not simple is pinpointing and predicting the direction that the gap's going to go before it goes there. And that is what I do. And I've been doing this now for 14 years. I started trading in 2008. It took me over 3 years to develop my system. It's something that I do each and every day and call the live trades in a live trading room. We are also doing options, and I will talk about some options today. But again, if you look at here at any one of these charts, Amazon, the SPY, the Qs, we've had what some would consider a very bearish year this year in the market in 2022. Unexpectedly, because we came right off the highs from the end of 2021 into the beginning of 2022, the SPY actually did make a new high this year at the beginning of the year, and then we just continued to fall off. We've had some huge trades this year to the downside. Amazon was one of them. What was another one that we did? Adobe. Here's another great example. The stock closed up here around 370, opened the next morning down here around 320. Where did it go? Fell off a cliff. Went to 300 down in here, broke, fell in the last week, all the way down, broke 280. Again, you could have done an option, you could have done a put, which is a short, you could have done a day trade here. We did both. But it was all based on the gap, all based on the rating system in the gap that allowed me to predict that this would in fact continue lower and not rally. Okay. And any questions as we go along here, let me know. So how am I able to do this? I'm able to do this by looking at the footprints of institutional money that come in a stock. They come in and they come in full throttle. It's buying, big buying, or selling, or shorts, okay? So again, we're shorting when we're taking a position of stock. If you short a stock at $5 and it drops to $4 and you have 1,000 shares, what would you make? $1,000. The concept of shorting is actually a great concept For some reason, a lot of traders, though, do prefer to go long, but you can't trade against institutional money. And as I said, this year we've been falling, and many stocks have been falling as well. I just showed you a couple examples. You've got to trade with the power. You can't trade against it. It's very dangerous to do that, and you're setting yourself up to lose. So again, this has been a year where you've really had to be very careful with what you're doing, but quite frankly, I think you have to be careful all the time what you're doing taking a trade. What do I mean? Be thoughtful about the positions you take. Have a reason for doing it, okay? Don't just take pot shots. It shouldn't be about a 50-50. It should never be about a 50-50, actually. So again, as I was saying, I'm looking for institutional money, and I'm spotting it, and then I'm trading with it, which makes it a heck of a lot easier to make money then, okay? You can make money on a regular basis if you learn how to do this, whether you're doing options or day trades. I'm capturing these moves on a small time frame each and every single day. So a big flow of money going in a certain direction is really what moves the market, stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not there, it actually is. And that is, again, where a lot of people get tripped up. They're convinced the market's higher, then we drop. They're convinced the market's lower, then they finally get in short, then we rally. You've got to get the timing right in these trades. Now, this was one we did. Here's a chart of Meta. This is Facebook. Close here, gap down. Again, close up here around 130, boom. Gap down here around 95, tanked, okay? There you can see the volume. Institutional money did what to Meta? They sold it, they dumped it. So again, if you're on the right side of that, you can see it's so easy to make money because you're in and they're pushing the stock down or they're pushing the stock up, okay? But knowing how to read what institutional money looks like is just essential to becoming a successful trader. So for me, it's about one focus, one thing all the time. One trade a day I try to do, maybe two, but I prefer to focus on one. So here was a put. We did this short, we did Apple. We did the 142 puts that expired on the 11th. I sent this trade out in an email at 7:40. You cannot take the trade then. I'm taking the trade into the open. But I saw this early in the morning that the trade would in fact fall and work. Cost was 350, number of contracts was 20, risk was 7,000 with an advanced trader risk. You could have risked less. You could have risked 1,050, took 3. The nice thing about options is you can trade options on a cash account, you don't need margin. And you could take one contract, even hold it overnight. You would have been risking $350 and still could have made 129% on this trade. Now let's look at the chart. November 3rd, let me go back here, I called it. November 3rd is here. So again, this was a gap down. The stock closed here, gap down. Take it to the right. We shorted this, we did the put, we got in it, we did the 142s, and then you see where it fell, dropped, boom. Again, 24 to 48 hours, I'm looking to get in and out of something, usually in an option if I can. You know, I prefer to get out of the options quick too. We are doing the weeklies, okay? But this is a nice way, again, with a very small risk, if you're doing an option, paying $350 for one contract versus shorting the stock at the price point on margin. We did Meta then on November 2nd. I sent this out a little bit after the open, the 92 strikes. This cost $280. This is very reasonable. 79% return investment is a good trade. If you risked 8,400, you could have made 6,600. If you risked 1120, you could have made 880. Again, let's take a look at Meta. November 2nd is here. Stock closed here, gap down, dropped, fell, boom, boom. Again, 1, 2, out, done. You see where we were right in here at 95. We did the 92s, it fell. See it? So again, you don't even have to have some huge megalodon bar. Something like that with a precise entry can make you money, like on this, just getting the timing right, getting the momentum right when it's going to hit and go. Because that was like a medium-sized bar, actually, in Meta, okay? And again, any questions as we're going along here from anybody? Okay, so I hope I'm making my point that gaps have huge opportunity Because they spot power money. They spot power money in the market, and that's very, very important, okay? And it is because you want to make money and you don't want to lose. So gaps are created with large institutional money. That is what makes the gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. By having a formula to rate and qualify the gap, you get confirmation and conviction that the large institutional money is on your side, and then you play it. Gaps are an event and create a sense of urgency. Hurry, 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 let's go. That kind of thing, all right? Thus, an action is being forced by participants of the stop. This is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you are trading on the side of power money. Okay, so find gaps and rate them using a checklist. This is what I do. If you came and decided you want to learn my method, I teach this in the class. It's a checklist. It tells you what to look for in the price of the stock. Okay, and that's important, actually. Again, we're looking at technical analysis. It's called advanced technical analysis. Okay. So again, it's not a little bit of money. It's a lot of money, or what I call power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people, of which, quite frankly, there's a lot of in the market. There's a ton of in the market. And when you think about it, you're like, oh, yeah, this makes sense. A lot of things that I do make sense. The fact is that when you're going, okay, and you're going along, a lot of times I think people are doing stuff and they really don't even know why they're taking the trade. Again, they don't have a strategy. They're just buying something on a moving average or something like that. You know, knowing why you're doing something, having a reason why you're doing something, fully understanding why you think it's going to drop or why you think it's going to rally, it's so beneficial to you, not just for your account balance, okay, but also for your conviction level, for your emotions, you know, so that you understand why you're doing it, that you might hold a trade a little bit longer, you know, and that you might squeeze a little bit more money out of it, or wait if it's down till it goes in your favor. So, you know, you have to understand why things are happening. It helps you. Again, not just your account, but also what's going on in your mind. This is a good example here, going back and looking what was happening in July. So in July of this year, the market had a big rally. And everyone thought for sure this was the low of the year in June. It lost the rally, fell, came down here October 13th, made another new low for the year. Will we break this? We could break it today, tomorrow, next week, certainly before the end of the year. So again, you know, you've got to look at what's going on. Who's in charge? The bulls or the bears? If the bulls are in charge, you want to be long. If the bears are in charge, you want to be short. Okay? But learning how to read that is what people come and learn from me, because it's not just what's going on in the moving average. Make sense? And again, any questions, you can plop them in the room. But getting back to what I was saying, how do I figure all this out? I do it in the pre-market very early in the morning. The Golden Gap 26-point rating system is what I named my system, and it pinpoints the direction of power by reading the price action in a chart. You need conviction to make money trading, and having a great system actually helps you do this. And again, if you have a small account, you could grow it. If you have a big account, you can grow it. You can trade with a small account. You can open up an options account with $2,000 cash. But if you don't know what to do, you're going to lose money whether you have $100 grand in an account or $1,000 in an account. It doesn't matter how much money you have. If you don't know what to do or don't have a good strategy, you're going to lose whatever amount of money you have. So learning is critical. It's key to moving forward to your next level of success. And if you want to trade effectively, you cannot go with the crowd of day traders. That's one of the things that I always point out. You all have to have an edge. For me, my edge is shorty. For me, my edge is trading on the gap. For me, my edge is getting in right away, very quickly, early in the morning, okay? Trying to capture the move to the downside and trading on the 1-minute chart. But remember, success requires a plan of action. Why are you going to do this thing here? Where are you going to do it? Where are you going to get in? Where are you going to get out? Have you sized yourself properly? You know, it's like anything, you go and you want to take a trip, you go get on a plane, pilots have checklists. Everyone has checklists. It keeps you organized and focused. So I have a checklist, okay? Having a checklist keeps you organized and focused. Having a checklist forces you to look at what you should be looking at in a chart, in a stock, to make the correct decision. Having a checklist helps assist you with directional bias. And actually having a checklist keeps you on track to reach your goals. A checklist is a plan of action. Everyone that puts money into the market should have a plan of action and a checklist. On a professional level, all high income career field specialists have checklists in different industries. When you go to get surgery, that doctor has a checklist that goes through things. And by golly, you want him to go through that checklist before he operates on you, okay? So it's very, very important to take what you're doing seriously, okay? As serious as if you were performing surgery. Like, that's serious, because it's your own money, your hard-earned money, and you don't want to lose it. Okay, and not only that, you want to grow it. You know, like I was saying, that's the whole point, trying to grow it, grow your account, okay? Any questions here so far? I see couple new people signing in. So we were talking about gaps. And I'm going to go over here 1 week of us trading gaps. These were all day trades. Okay, these were trades on margin with an average risk of around $2,800 per trade. Again, you need a margin account to do these trades. We talked about options earlier. 15,486. Let's go back and look at a whole week here. Again, I run a live trading room and I call the trades live in the room. This was 11.7 play of the day in Apple. We shorted it at 136.80. Shares was 1,800. Risk was 30.60. Exit was 135.68. This is a good move. $1 out, done, boom. Profit was $2,016. What day was this? Let's go over here. Stock closed here, gap down. We shorted it. We got in and out. Boom, done. Quick in the morning and done. That's it. This doesn't even look like much, but we had such a precise entry and such a precise exit that it was great. It worked. Then at 11.4, no golden gaps. Wait for the good ones. Sometimes you get up in the morning, you shouldn't trade. There's nothing to do. It's not there. Do you know what I'm saying? Back off. 11.3, entry was 262.20. Shares was 1,500. Risk was 31.50. Exit was 260.50. This was a beautiful trade. Actually kept going. Profit was 25.50. 11.3, again, take it here and up. Closed here, gap down, fell. We shorted it. We did the Qs. We did the QQQs here. It gap down. We shorted it. Boom. Got in, got out. Pulled almost $2 out of that. Again, $1 is a good move. $2. Okay. We're always looking for momentum. And again, these are all shorts. Okay. Could have done an option in this if you didn't want to pay the price on margin here for this, though. What about the SPY? 11.2, we shorted the SPY. Again, short, short, shorts. Closed here, gap down, fell. Boom, got in, got out, done. 383.50, 1,500 shares. Or no, I'm sorry, this was this day. This was the third. You could have done the SPY that day. This was the second. Closed here, gap down here. We got in and out here in the morning. This was the day the Fed had the announcement. We shorted this morning. We got out with profit. Then it rallied up first with the Fed announcement. Then it fell off a planet. So we were in and out of here early. Low of the day here was broke 375. Again, we were way, 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 way out of that before then. We pulled a little bit more than $1, 383.50, 382.30. Profit was 1,800. That was a nice one there. Very, very nice, actually. Then in 11.1, we did one long. Crazy because it closed red, but we went long here. Stock closed here, gapped out. We went long Uber. Boom. We got in it and we got out of it and we entered it at 30.30 and we exited with 60 cents, and that was enough. That was enough in here. So again, you're looking to get in and out very, very quickly in the morning. And then the biggest play we had was Meta, which I did talk about earlier. This was 10.31. Big fat red bar. Again, you could have done a put, you could have done the day trade. Stop loss here, gap down, fell. Entry was 97.40. We did an ad because I saw it was going. I said, if you want to take more, you can. Average price was 97.30, exited at 94.90, $6,720. This is a great trade. One, we had a really good entry. Two, we did the ad. And three, we got the extension. Again, a red bar signifies what? Selling, shorting. The stock price is moving down. Again, shorting gives me an edge. Learning how to short gives me an edge. And a lot of people have struggled with that this year because they don't know how to short. If you don't know how to go long and short, you're missing out. Again, I do go long some days. I prefer to short, but you have to know how to do both things. So absolutely. Okay. Now I drew this pie chart. This is very squiggly here, but I drew this. And this depicts, okay, the amount of time that I spend really doing the prep work, preparing to trade, trying to figure it out, rating the gaps, looking at everything in the morning, watching the market. Then I'm in and out here really quick. So I'm not in trades as long as I'm taking to think about doing them. So it's the time you spend before trading really that can be very beneficial to you, that you can be in the trade less time. Again, it's about hitting the bullseye, accuracy. And the less time you're in a trade, actively have money at risk, guess what? The less chance you have of losing. Things could change. Things can always change. But if you're thinking about trading and you want to be consistent, or if you're trading right now and you're not seeing consistency, or if you're losing this year, the only way you're going to do well is, number one, having a high winning strategy. Number two, good money management, critical. And number three, a good mentor to follow. While you could get away without that if you have a good strategy, I think having a mentor makes it a lot easier, particularly on days that are very volatile. And we've had some days like that this year. But timing is key. Again, I'm in and out very early in the morning for the fast trades. And for the options, I still think I'm doing them fast too, because we're doing the weeklies. You can trade from home. You could trade in an app. You could be working and have it on your computer part-time. You can do this anywhere. The concept of trading is about chunking it out. You want to make more money. If you have more money coming in, you're not going to be so bothered about inflation. You're not going to be so bothered about the prices of things skyrocketing. You're going to be okay. And you're going to be able to take care of your family and yourself. And really, that's what it's all about. And I think it's just about getting to the point where you decide you're going to do something different, and then throwing yourself into it, acknowledging that it may be a challenge, but it's fun, it's exciting. Whenever you want to get to the next level in life, you have to take risk, period, end of story. You're not going to be able to change your life if you're not willing to take risk. If you're unhappy with your life or your trading or your finances or the amount of money you're making right now, the only person that can change that is you. And so you have to decide yourself if you're willing to do something to change your life. It takes courage to do that. I get it. It takes risk. Many times it also takes spending money to actually get to the point where you're making more money. Ever heard that? You have to spend money to make money? That's what it is. Whether it's paying for a class like mine, whether it's risking money in a trade, and preferably both. The thing is that when you can see into the future about your own life and say you fast forward 12 months from now, week before Thanksgiving 2023, where do you want to be? If you can envision that for yourself, if you can actually visualize for that for yourself, you can manifest it for yourself to have a better life 1 year from now and more money in the bank than you do right now. And I think people tend to have difficulty with that, especially if they're not happy with what's going on right now in their current situation. But you and only you can get yourself out of it. I'm a support system for people. They come to me, I teach them, and I'm helping them each and every day in the room. I'm a support system. But the reality is that it's you that has to make the decisions to do it. And sometimes people say, well, I've been working so hard. I've been studying. Yeah, listen, sometimes the work is studying to learn something. Sometimes it's that. But sometimes the work is the emotional work. And guess what? Sometimes that is the hardest thing for people to do. They can't let go of mistakes they made in the past, bad decisions in trades, losses, whatever, classes they took that didn't learn anything and they spent money. The reality is let it go, move forward. We're into the end of this year. I'm looking forward to a new year. Embrace the coming year, 2023, okay? And look forward to it. So many people are so down about what's happening right now, not only in the world, the economy. We can't live our lives being, everything's so bad. we have to do what we can to actually improve the quality of our own lives. And that's what it is, because you're not going to change the certain circumstances that are happening outside of yourself. Any questions here? So empower yourself to trade. You can do it. I teach a class once a month. It's called the Golden Gap. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to enter and exit the stock on the day. The course teaches price analysis and technical analysis on an advanced level, which again is important. So it is a 2-day course, a full 2-day course on how to strategically find, pick, and place stocks that are professional bearish gaps. Class is online. I do this class once a month. It's called the Golden Gap course. There's only one more class left this year. It's December 10th and 11th. My class is always on a weekend, 9 a.m. to 5 p.m. Eastern time. Class tuition is $69.99. You could be anywhere in the world and take it. Again, the class is online. Now, because we're getting into the holiday, I started the Black Friday special early for the people here at the webinar if you want to take advantage of it. You can take advantage of this. You can sign up and join. Every sale is going on through November 27th, okay? So the Golden Gap course combo is $74.99. You will get 2 classes, the Golden Gap course, which is a 2-day class, and the Trends course, which is a half-day class. You will also get the trading room free for 1 year and the options newsletter subscription free for 1 year. In case you want to do both the day trades and the options, you will get those free if you sign up for the class, the combo, by 11/27. And again, class dates are the 10th and 11th, and the Trends is the 13th. Now, if you only want to do options, I have a Black Friday sale on this. You get 1 bonus month, save $1,000, and you get the newsletter through the end of 12/31/2023. And you also will receive the Gap Options course free, which is on December 15th. It is 11 a.m. to 3 p.m. Eastern time. That is on Thursday. So if you want to just do options, this is just on options, okay? And then I am running specials on everything else: the market report, the Trends course, the wealth manifestations class, the entries course, live mentoring sessions if you'd like to do them with me. There's no prerequisites. The Gap Options course as well. And this includes 1 month free of the Gap Options newsletter. It's $1,500 for the sale price. This is a great, great price, and you get 1 month free of the newsletter. Any questions from anyone about anything at all? The best value, the best deal is the combo. Again, the class is normally $69.99. You pay to be in the room, the options letter. You're going to get 2 classes for $74.99, and the room free for a year, and the options newsletter free for a year. So does anyone have any questions about anything I said today? I see I'm done a little early. I can pull up my charts here. Now, I don't know if I have to stop and repress it. Can anybody see the SPY, or do I have to stop and start it?
Yes, no, we can see it. It looks good.
Okay. Any questions of that? First of all, does anyone want to ask me about anything? Any chart, anything about the market while I pulled it up? Since we have a couple minutes here. Or anything about it just said. We did gap down today. So I figured I'm still talking here with you. I may as well just go over this here briefly since we're dropping today. So I will tell you right now, we shorted the market. We shorted the market today in the live trading room. We shorted the market, and I called a put. The market was gapped down today. I liked it. I liked it to drop. We're red. It's 1:33 in the afternoon, and we have 2.5 hours left in the day. While that doesn't seem like a lot of time, it actually is a lot of time for what? For selling. So we were talking about, I prefer to short. What is one of the reasons I prefer to short? Because selling happens fast and quick and big and a lot faster than moves to the upside. Again, while I will go long, things happen when panic comes into a stock of the market. It can go like that. The market could drop between now and 4 o'clock, some crazy number, because it has 2.5 hours left to go. I don't know if that happens, that it goes crazy, but it could. I know it is dropping. Okay, so let's look at what happened today. So yesterday was 11:15. We opened up. Actually, we closed at 398.49, and then we opened at 396.78 today. And we shorted this. We got in, we shorted it, and we're falling. Now let's look at the cues. Here we go. Look at this. This is happening while we're talking. This is beautiful. Beautiful. So again, I saw this morning very, very early that the market would fall today. I saw it in the morning early. I went through the rating system. Then we opened the room. Then we did the short. Then I called the options. And again, you could still be in these things. You could have been out quick in the morning, or you could still be in them. So again, we had a gap down here in the QQQs as well. Closed at 289.39, closed here, gap down, boom. Open at 287.39 today. And again, where could we go? Lower. Again, selling happens so fast. The only way that we'd move up here today is if somebody, institutional money, would come in and buy the market or go long. And as it seems to be, guess what? That is not happening. Retail traders keep trying to buy every dip and it's not working. You had that here in the lunch period here. We had people coming in and trying to buy the dip. It didn't work. It didn't hold. We were already falling in the morning. We're falling again right now. And again, you know, I like to short because panic comes in quick to a stop, really, really fast, and it moves very quickly. Now let's look at another one here. Tesla, gap down again today too, as you can see. Stock closed here, gap down, closed here at 194.42, open here at 191.51, closed here, gap down, boom. Look at it. This looks lower too. Let's look at Apple, since that's a big one that affects the market. Apple is sitting its butt right here on support, but it did gap down today. It absolutely did. Let's look at Amazon. Let's see what's happening with that. This is kind of squirrely here. Looks like this gap down in the morning fell, rallied, ran all the way up to 98.48, and now this is starting to fall too. So again, what's going to happen here between now and 4 o'clock? Looks like selling to me, wherever it goes. But again, this could go somewhere crazy. Really crazy. Where do I mean? Well, again, we could go to 390. So the market right now, the SPY is trading at 394.48 and change. Could we drop $5 like that? Yeah, we didn't even need 2.5 hours to do it. It could happen in 15 minutes. It could happen in a half an hour. And the QQQ's right in here at 285.82 could drop to 280 today before the close. 2.5 hours is forever for something to move down. And that's again why I like to focus on the short side, because you can get big moves fast. And today is a day where, again, even though I like to get it out quick, you could have held today. You could have held today because you might actually get a bigger move here today into the close than this morning. But anyways, if anyone is interested in any of the Black Friday sales, feel free to email me. I'll put my email here again in the room. It's a great time of the year to learn and get organized and prepared for what? For 2023. So, you know, if you're doing something that isn't working right, reach out if you have questions. You can always email me or call me with questions. Feel free to do that. I appreciate everyone coming today. I appreciate you having me, Sherry. Any questions?
Hey, Melissa. Yeah, I love it. Hey, we do have a question from Carla. She's asking, is this buying stocks only, or do you use options?
I do use options too. I don't know if the person was here earlier. I talked about options earlier. I had some examples in the webinar earlier today. Yes.
Okay.
So just
so we just need to hit that replay.
Yeah, basically you can do, if you have something like the Qs, this is a little bit pricey, and I'm in the trading room. While I do call margin trades in the trading room, you could buy a put. But I also have an options newsletter. An options newsletter is where the newsletter gets emailed to you. It's not a trading room for the options. It's a newsletter. It goes right out to you. And so you would have gotten the trades this morning that I did call in the market, because at 9:24 this morning, I did call a 395 strike in the SPY, and I called a 285 strike in the Q. So those trades are going here, okay? So you could have done the options and you could have done the day trades, you could have done both. And again, the advantage of doing options is that you don't need a margin account, or if something's really expensive and you have a margin account, you don't have to suck up all your money or need XYZ amount of money to take it. So whatever you pay for something is whatever it is, and you can hold something. So again, if we don't fall off a cliff today, we might fall off a cliff Thursday or Friday. Remember, it's only Wednesday. We have a lot of economic data that's out tomorrow morning, the unemployment. Claims are always Thursday morning. There's so much going on right now in the world. I mean, it's just so much going on right now. And so it's really important for people to know what to do if you're trading. Any other questions? Anything else?
Speak now, folks, or you'll need to email Melissa.
You can always email me. Again, happy Thanksgiving. Happy Thanksgiving. Sherry, happy Thanksgiving, everyone. How much does the service cost? The service for the options newsletter is normally $69.99 a year, $7,000. I'm doing a Black Friday special, which is $59.99, and it will take you till the end of 2023. So you actually get more than 12 months. The class itself, the Black Friday special, is $74.99 for 2 classes, and you get the options newsletter for 1 year free and the trading room. If you'd like more specific information, Carla, or information to sign up, you can always email me at melissa@thestockswoosh.com or go to my website, www.thestockswoosh.com. All prices are listed there and all the information about all the classes and services I offer.
Perfect.
Thanks, everybody. Stay
That's
safe and have a great holiday.
Thank you. Happy Thanksgiving and Merry Christmas if we don't see you.
Merry Christmas, too.
Have a good day. Thank you for being with us. All right. Let's see. All right, we have a little something different here today. We had, I wanted to let you know that if you have to leave early or if you come in late, you can listen to this webinar at tradersexclusive.com, and then you go to the, on the right-hand side of the home page, you'd see the trader education webinars. You just click that link, and then it will take you to the archived webinars. So our next speaker was supposed to be Paul Lang, but he can't be with us. So we're going to do something a little different. We are going to show you a training from one of our speakers who comes with us 2 or 3 times a year, Dan Passarelli. And it is going to be one of his recent TradeSmart workshops. So let me know if you guys can hear this video, and let's get it up there. Now we'll start it up. Oh, there it is. Pretty sure we can hit.
Broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, this is Dan Passarelli. I'm back. If you were just in the last class, I'm back. I haven't lost my voice yet. So welcome, and I want to make sure you can hear me. So now please go to the General tab and just let me know you can hear me, will you? I would like to know. All right, hello again, Bruce. All right. Okay, so we're going to wrap up this month's class talking about growing your portfolio with limited risk. And of course, it's all about getting edge, and which is what this whole month has been about. And this should be a shorter one, which will be a nice little treat for those of you who've been just on with me in Total Earnings Domination. Before we get started, I do need to point out, hello, Leon. I do need to point out that options are not for everyone, and you should read characteristics and risks of standardized options before trading. All right, so let's talk about, so here's what we're going to talk about. Edge and trade selection, spreading and risk on options plays, macro spreading, and total portfolio edge. This is a fun and interesting conversation. All right. So as far as edge and trade selection, here's how we really do that. We select our trades with what I like to call the big 4. It's technical setup, identify volatility events, And volatility analysis, that's like our trifecta of analyses, which enables us to state a forecast, which enables us to select a strategy that meets our forecast. And so like all these things really do kind of go hand in hand. Like we use the analysis of technicals, fundamentals, and volatility and strategy selection to get edge on individual trades and your overall portfolio. So we need to select the optimal, well, when you select the optimal strategy, it puts traders at an advantage. All right, this is called optimizing the portfolio spread. So as far as talking about spreading and risk on option plays, there's two types of risks, and I forget if we talked about this last time or not, but I know we for sure talked about this in a different series a few months ago. There's intra-class spreads and inter-class spreads. Does that ring a bell to folks? Inter-class spreads and intra-class spreads. Basically, in intra-class is the one you're more familiar with. Two or more options on the same underlying, like a credit call spread, a straddle, a time spread, all that. And then inter-class spreads is two or more options with different underlyings. Now, if you've been in options for a while and you never heard these terms before, that's okay. Like these are terms that are a lot more in the world of like commodity trading rather than regular securities options trading. So, I'm sort of borrowing a term from a very similar concept. All right, now, why do we spread? Mostly we spread because we get better risk reward and we get a different risk reward. Like if all we did was like buy calls and puts, like we'd just have all these directional trades. And hey, maybe that's fine and maybe it's not. But when we spread, we're able to trade volatility. We're able to make money on time, like with total earnings domination trades. We make money on volatility crushing, and on the volatility skew on those spreads. And there's a hierarchy of risk. There is, Apple has earnings coming out after the close today. If Apple blows the doors off earnings, which if I'm not mistaken, I think that might have popped up on my phone that they did, but let me scroll here. Apple posts a big beat in 9% revenue pop. Wow. So that means that Apple's probably going to go up, right? Because there was risk, reward, like there was exposures very specific to Apple stock. But then there's sector risk too, like, we could say the tech sector, but that's a very big sector, the computer making sector, although Apple's got their hands in a lot more than that too. But, like if we want to extend that around a sector, like we were just looking at, there's one of the earnings trades we talked about yesterday, we analyzed yesterday. Was it Visa? Because MasterCard already had earnings, so Visa was up as a result of that because they're in the same sector. And if one goes up, the other one probably will. It's within an industry or a sector. And then there's systematic risk. A better word here is really exposure rather than risk. Because when I say risk, like what a typical risk manager means when he or she says risk is the risk of making or losing money, either. But systematic risk is like, okay, hey, the whole market, the S&P 500 is down 3% today. Well, guess what? You're going to look at your screen and see a lot of red in all the individual stocks that you follow, right? So that's just all stocks moving in sympathy to the market. So in order to trade intra-class spreads, all you're really trading is the individual stock risk. To trade sector risk, we would do inter-class spreads. To trade systematic risk, we do inter-class spreads. And so This is like kind of making the assumption that we're taking option, in this case, option positions in several different stocks. Maybe they're all in the same sector. Maybe they're not. Maybe they're, all in different sectors. So that brings us to the concept of macro spreading. So a macro spreads, like, let's just think of like a system of interclass spreading. Like, just think of like creating a system for having positions in lots of different underlines. So we can do what's called pairs trading. Are you familiar with what a pairs trade is? Who can tell me? I'll just tell you. I know some of you know this. A pairs trade, like a class. Okay, yeah, okay, I figured. A pairs trade, like a classical pairs trade, is like we're just talking about. I was just talking in the other class about futures trading or commodity trading. Like somebody might buy corn futures and sell soybean futures, right? They're both grown in the same fields, probably at different times, right? Because the soybeans put nitrogen into the soil, so it helps everything grow better that way. But and so farmers have to choose, hey, do I plant corn or beans this year? And so trading that pair is one way of saying, well, look, I don't know if grain prices are going to go up or down. I don't know what inflation is going to do, but I bet that there weren't enough fields of corn planted this year. And so the price of corn is going to go up relative to the price of beans, right? But you can do that with stock too, like buy MasterCard and sell Visa. Boom. Yes, exactly. And then there's dispersion model trading, which, let's see, do you have a slide for that, or do I should I just talk about it now? No, I think I just talk about it now. So dispersion model trading is something that started coming into play in like the early 90s when I started my career in this business. There's a company called, oh no, I can't think of it. Timber Hill, which is the trading arm. Well, it's actually where IB got their start. There were these three partners. I believe they're out of Philadelphia, if I'm not mistaken. No, that's Susquehanna. There were these three partners. I think it was two men and a woman. And they came up with this mathematical model for trading volatility against volatility. So basically, there is a formula, and I remember learning this formula in college and it not being all that complex. Like, I've never been a super math genius, but I was able to grasp this. So maybe you can look it up at some point. But basically, if you have a basket, like maybe a ETF that just has like 15 stocks in it, if you take the volatility of all the stocks in that basket, you should be able to calculate the volatility of the basket, right? Like, there's some diversification, so the volatility would actually be lower for the basket than the average stock in the basket. But like, there's a very simple, straightforward model. Now, they picked up that ball and ran with it. They said, well, okay, so all the components of the Dow Jones Industrial Average, that's 30 stocks. Let's compare that to trading the diamonds or trading the DJX. In fact, trading both of those. And let's look at all the 500 stocks in the S&P 500 and compare that against trading all 500 of those stocks. And also the SPX, and also the SPY, and also the XSP, and also the E-mini options. We're talking about options. So basically, like, like there's only 30 stocks in the Dow. Like if the implied volatility of one of those stocks like is reasonably, like if the implied volatility of like 10 of those stocks is pretty low, and it calculates out that the DJX should be a higher implied volatility, but it's or should be a lower implied volatility, but it's actually higher. What they'll do is they'll overbuy those component options that have volatilities that are low based on this mathematical formula, and then sell options in the diamonds or the DJX because they're overpriced based on this formula. And they'll buy and sell in between, you know. And back in the day, they would hire people that they would call sheet monkeys. Hand to God, this is what their names were. They call them sheet monkeys in the beginning, because they would just give them a matrix of prices and they'd say, go stand in the pit. And when, you know, when this one is cheap relative to that one, buy. When this one's expensive, sell. And then soon they ended up giving them computers, and then they called them box monkeys, because they made it so easy. It's just like, if this turns green, yell buy them. If this turns red, yell sold. And so like their traders didn't really even have to know how to trade. They just couldn't be colorblind. And it helped if they were like former professional athletes, which many of them were actually, college or professional athletes, mostly college athletes. But they would hire these big, tall, strong, loud, intimidating men to go stand in the pit and be really aggressive and fast. And as soon as it turned red, they'd say sold. And as soon as it turned green, they'd say buy. Now, I specifically, by the way, said men because that's who they would hire in the beginning, mostly, because they wanted somebody that you wouldn't want to mess with. There's this one dude who stood next to me from that company, and he was this big, muscular, former college basketball player. And like, you know, if we both made the trade at the same time, and you know, like I wanted to say, no, I was first, and he said, you weren't first, I was first, I probably wasn't going to put up a big fight, you know. And then as the floor got a little more electronic and a little more civilized, then the testosterone level wasn't as important to the component. Now computers basically replaced all their labor, but that's all they were doing. They just had like every option that was available for trading, all relative to each other. So they would have to hire back then hundreds of traders, because there were, you know, 5 trading floors or something with 30 pits on each floor. And so like they would have to hire literally a couple hundred traders, and they traded very big. They'd have to have tens of millions of dollars to do this. Now it's electronic, but they still have to have the fastest servers. Now it's not testosterone, it's latency. Milliseconds is what they pay for. And it turns out that, you know, firing all that human capital, the human capital is way less expensive than trying to get lower latency. The amount of time people will pay for a millisecond to be a millisecond faster than somebody else is like tens of millions of dollars. So guess what? You're never going to trade that ever. So, wow, Dan, you just wasted our time. Why'd you tell us this story that is very interesting about something that I'm never going to trade? What a waste of time. I could have been watching Scooby-Doo, right? I know you're thinking that. You just got to tape Scooby-Doo on your TiVo. It's not called TiVo anymore. DVR or DVR? That's what it's called, right? DVR? I don't know. Everything's on demand now anyway, right? So listen, I didn't actually waste your time because we're going to take that professional trading concept and we're going to steal it. And we're going to apply that same concept to our own trading. We're not going to trade it the exact same way. We're going to trade it in a similar way. And it's really just simply by diversification, but being strategic about it. So when you diversify, there's really two things you can diversify when it comes to option trading. There's direction and there's volatility. That's it. Direction's your delta. Volatilities can be split into historical or implied. Historical volatility is measured by theta/gamma. Volatility is, or implied volatility is measured by vega. So here's the thing. It's pretty important to diversify both of those. Now, you might have a favorite strategy. And honestly, a lot of my trades right now are earnings trades. That's where I'm focusing my energy, but I've got some on that aren't earnings trades. Why? Because what if this earnings season has turned out to be a complete lemon? I think it looks promising so far, but what if it does? I have other trades that work too. What if all my trades were bullish trades? Well, how would that have worked out this year? You would have lost money. I was talking to one of our students he's a really smart guy. And he was saying, I'm just not making as much money this year as I was last year. I said, like a monkey could have made money trading options last year. Like anybody could have. The stock market just went straight up, like practically every day, well, every week, I think almost for sure. Like all you had to do was have positive deltas and probably negative vega, and you would have made money with your eyes closed last year. Now you have to be an actual trader. If you were just bullish all year this year like you were last year, it's probably been a tough year for you. So good news. I'm going to show you what you need to do this year, and really always. We want to have bullish and bearish directional trades. And we want them both to work out. We want to have bullish deltas on stocks we think will go up, but we also want to have bearish deltas on stocks we think will go down. And we want to be right on them both. But if we're not, if we're somewhat good at this, if it goes up, we should make more on our bullish trades than we lose on our bearish trades, and vice versa. But we also should have some bullish and bearish volatility plays. If every one of your trades is negative, gamma, positive theta, maybe you're not doing it as well as you could be. Now, some people are really good at, selling volatility and doing income trades, and there's nothing wrong with being good at that and preferring that, but don't make that your only thing. You can make most of your trades that. If that's what you like to do, that's what you're good at, that's what you learned. But if you also have some, straddles or debit spreads or long calls, long puts, or whatever, on the days when volatility explodes, you're going to get hurt on your income trades, but you'll make on the other ones. But we still want to consider every trade individually. But also, if we've got a bunch of different trades and we're long, deltas on some and short deltas on others, we can think of each trade as one leg of the master spread. Like if you put on a bull call spread in Apple, you buy one call and you sell a higher strike call. You've got a long position and you've got a short position, delta-wise. You've got a positive volatility position and a negative volatility position. So you're making on one and losing on the other, and that's okay. Part of the plan. Now let's say you've got the debit call spread in Apple, but you've also got a long straddle in Twitter. And you've also got an iron condor on AT&T. And you also own some puts on Tesla. Hopefully every one of those trades works out and you make money on every one of them as individual trades. But if you don't, it's okay because you've got different types of trades on. You're diversified both directionally and volatility wise. So yeah, so this is just basically a review of what I just said. Direction wise, sometimes with standard spreads, you can profit on both legs. Like if I buy a bull call spread in Apple, if the stock goes right up to the strike at expiration, I'll make money on the delta of the long call and I'll make money on the theta of the short call if I don't go through the strike. But if I blast through the short strike and lose on the short call, that's okay. I'm hitting my maximum profit. Same thing with macro spreads. I don't have to make money on every trade if I'm somewhat diversified. And the same thing with volatility. So let's talk about deriving portfolio edge. You guys know how roulette tables work? Who's been to casinos here and enjoys playing casino games? Anybody? Nobody? Who's ever been to Las Vegas and didn't do something so terrible you can't share the story with us? Yeah. So the roulette table, right? The way it works is there are 18 numbers. It's a wheel, right? And there's 18 numbers on there that are red, and there's 18 numbers on there that are black. And they're, various different numbers. So that's a total of 36 numbers that are either green or black. So here's the thing. If you put your chips down on number 7, well, no, you can bet on certain numbers, but you can also bet on the color. If you put your chips down on red, you're betting red shows up. If it does, you get paid 36. No, you get paid 2 to 1. If you put your chips down on the number 17, there's 36 numbers. If 17 comes up, you get paid 36 to 1. But here's the thing, there's not 36 numbers. There's 38 numbers. Because there's also a 0 and a double 0. So do you remember we talked about expected return? Right? Your expected return is, well, your chances of success is 1 out of 38, but your payout is 36 to 1. So your expected return is you lose a little bit. You lose 2/38, I guess that is, right? That's the negative edge you give up every time you play that. And then, you just go and you have some free drinks and you try not to lose too much and hope you get lucky and come out ahead that night, even though you're playing a game that's a long run losing game. If you go and play it every single day, then you're probably going to lose in the long run, unless you have an edge. Now, that with certain games, you can actually have an edge over the casino, right? Like, what is a casino game that you can actually have an edge over the casino under certain circumstances? Anybody want to throw something out there? What is an edge you can have over the casino? Blackjack, right. How do you get an edge over the casino in blackjack? Count cards, right. In conjunction with a very varying betting strategy. Those of you who are not familiar with this, if it sounds even remotely interesting to you, read a book called Bringing Down the House. Oh my goodness, what a fun book to read. True story. Yeah, if you count cards, you know, I mean, basically the way that works is you know how many high cards are left in the deck, and the more high cards that are left, the more of an advantage it is to the player. What about poker? Can you have an edge in poker? Sure. You just be more skillful. What about in roulette? Is it possible to have an edge in roulette? Is it possible to have an edge in roulette? The answer is yes. When I first heard that, I said, come on. Because one of the things I love most about my job is that I get to meet so many interesting people. Like, you can't be like a bozo and play and trade options, right? Like, you have to be smart about certain things. You have to, you know, have an interest in things that I find interesting, you know, like what we're talking about here, edge and gaming and, you know, what do they call that? Well, yeah, lots of different stuff like this. So I had this one-on-one coaching student who was a professional gambler. I was like, oh, really? Well, what do you do? He's like, well, I count cards, I play poker, play baccarat, or not baccarat. What's that one with the backgammon? Backgammon. There's a whole like backgammon gambling community, or at least there used to be, and there are a lot of traders in it. Pretty interesting. And he was also a professional gambler at roulette. I was like, well, you can't be a professional gambler at roulette. It's random. He's like, it is? Like, yeah, you ever spin the wheel around, the ball just lands where it is. Like, you can't get an edge. He goes, you can't? And I know he's just messing with me. I was like, well, how can you get an edge in roulette? He's like, easy. All the tables are laid out with the same number pattern, or at least for any given table, it's always the same table, right? So the numbers are all at the same pattern. So you go at the end of the day, and it's public knowledge, you can get a printout of all the numbers that came up that day. And if they all happen to be sort of clustered together, that is an indication that the table is not level. And if the table is not level, that little ball will weigh, you know, like will end up weighing down just enough to land more frequently on the low end of the table. And so all you'd have to do is go to a bunch of roulette tables at a bunch of casinos, find the one that's not level, and go gamble at that one and play the low side, I guess. Or maybe it was warped or something. There's some big thing. I don't know exactly how that works, but apparently, like, the harder you look to get an edge, you can find an edge. And casino security doesn't know that. I'm sure security does know this, but maybe I get like they probably send, you know, their grandmother in there one day and send some 21-year-old kid in there the next day, and who knows? I don't know how they do it, but apparently it's a thing. So, like, you can get an edge on anything, and the harder you look for it, the better it is to exploit. Like, if that was a thing that the casinos didn't know about, then you don't have to be as stealthy. It's easier to exploit. So with trading, we strive to win on every trade. And even if we don't, as long as each one of our trades has an edge and we're diversified, that leads to overall winners. Very, very much like that dispersion trading idea. So you want to stay somewhat, well, okay, so here's the thing. Just wear a belt buckle with a super magnet. I wonder if anybody has ever tried that. Interesting. Now, I once was working with a one-on-one coaching student, and I was telling him about this, and he really took this last bullet point to heart. You know, like, and you shouldn't. You should not take this very to heart. You don't have to be totally beta weighted flat deltas. It's okay to have your portfolio be overall bullish, or even overall bearish for that matter. Most people would be bullish because market tends to go up over time. And it's okay to have on mostly income trades if that's what you like to do. You like to do iron condors and credit spreads and butterflies and time spreads. Go crazy, but maybe just have some hedge on that. Some positive vega trades, some positive gamma trades. We don't have to have totally flat Greeks, but we want to be somewhat hedged. Now, let's talk about monitoring your portfolio risk when it comes to locking an edge. And by the way, was everybody in the total earnings domination class that we just had? Give me a yes if you were, and give me a no if you were not. Give me a no if you were not in the total earnings domination class that we just had like an hour ago, half hour ago, whatever it was. Oh, really, Charles? I thought you were in that. I know Ian was. All right. Well, we're not getting everybody answering, but okay. So we got at least one no. So we probably have more no's. Okay, that's fine. So how do we do this? Well, we want to use our portfolio analysis via our online broker. We want to beta weight our portfolio delta to basically turn the deltas of each of our positions into an S&P 500 position. I say SPX here, but I probably mean SPY here. And then we want to look at our theta, gamma, vega, and sliding risk. So I'm not going to spend a whole bunch of time on here. We're actually going to get out of this class a little bit early today. But if you go here, I can look at all the deltas of all my trades. Some of these are closed, of course. And we're in earnings season, and this is not necessarily indicative. This is kind of indicative of what we're talking about. Some positive gamma trades, some negative gamma trades. Some positive delta trades, some negative delta trades. Same thing with theta. I happen to have all positive vega here, but what are you going to do? So if I look at the deltas here, they all add up to 251.73. But that doesn't mean anything. You know, like Rocket here is a $9 stock, and it doesn't really move that much, frankly. 200 deltas there is not the same as 200 deltas in XOM. Like they're apples and oranges. So how do we compare it? Like, so that means 200 of these plus 23 of these is just some number that doesn't even make sense to look at. How do we take them from being apples and oranges and grapes and avocados to this being a useful number? We beta weight them. Click, and we beta weight them versus SPY. So what is beta? Well, beta is basically if we take one delta of one of these stocks and compare it to the S&P 500, we're basically turning those deltas into deltas equivalent to how the S&P 500 moves. So here in Rocket, because Rocket doesn't really move that much, 200 shares of Rocket is like being long 4 shares of SPY. Or is it 400 shares? This must be 400 shares, now that I think about it. So anyway, now we end up with a much more useful number down here. Now I like to keep this off beta weighting because unless I'm looking at the portfolio, because I like to look at them individually. Like I like to know, oh, this is 200, that's because I own 200 shares. Ah, I get it, I see. Delta is the only, well, hold on a second. Gamma also gets changes when you beta weight it because that's gammas, the units for gammas, deltas. But theta and vega don't change. All right. So that's one thing we can do. We can also look at our sliding risk, which if we look at like Honeywell here, we can look at price slices. And what I like to do is I like to go add a slice, unlock them all. Well, actually, you got to lock these two. And I'll make this one, oh, wait, 10% higher. This one, 10% lower. And then say, okay, this is the at the money here. If we go down 10%, how much do I make or lose? Oh, I lose almost $1,000 if it goes down 10%. I lose almost $1,000 if it goes up 10%. Why is that? Oh, because of the time spread, right? So I like to do that for individual stocks to manage risk. And look, like this in and of itself gives you an edge, right? Because you understand what you're doing better. But you can also, how do I do this? Actually, I can uncheck Honeywell and I can, here, I can close, or well, I can go, instead of single symbol, I would go to portfolio beta weighted. And then I would hide simulations. And all the positions I have on look like this. This is beta weighted. So if we stay pretty close, if the market doesn't move very much, whoop-de-doo, tomorrow's a pretty good day, right? If it moves a lot overall, and so we're looking at that systematic risk, right? So looking at that systematic risk. This is, this is what my portfolio risk looks like. Now, it looks a lot like a time spread because I've got 4 time spread, like that's the biggest trades that I have on because it's earnings season. I'm trading a lot of earnings trades. But that's how you do this on Thinkorswim. So we get rid of that again and show all and blah, blah, blah. There we go, back to business. We also might want to look at our net theta. Here we're making money on theta, but this is a little bit misleading too because we've got earnings time spreads and it's the day before expiration. So those short options that were short have huge theta, but it's really, it's not something we're trying to capture, we're trying to get out before the end of the day. And, Vega we can look at. So, just like if we look at all these things, like just we get to deeply know our positions better, and there's an edge to that. Who's asking me questions here in the GoToWebinar control panel? Sherry. Hello, Sherry. Sherry, do you know how to log into the MTM community chat room? Let me give you a link. And click that, and it'll prompt you to set up a password for it if you don't already have one, and join us there. Now, I talked about this in the last class, so I'm not going to spend a whole bunch of time on it. But like, what makes your trade successful? I mean, it's matching your trades to the situation, right? Matching your positions to your forecast. It's getting edge. I mean, that's one way to get edge. It's hands-on training. It's having a management plan. And so there is another class that if you're not part of it yet, you should be. It's called the Market Taker Live Advantage Group Coaching, and it's a daily class taught by John Kamisic, who's formerly with Goldman Sachs. He's our other coach here, and he's fantastic. He's going to talk about, it's from 9 to 10 Central every day, which is 10 to 11 Eastern, 7 to 8 Pacific. And he gives trade ideas every single day, which can help you succeed in all market environments. If the market's really falling, he's got trades for that or to protect against that. If it's rising, stuff for that. They're all edge-based setups. It's an earn while you learn style class. I like to call it a trade alerts class on steroids because you're watching the trade live, and so you're the first to know it. And it's earn while you learn because you're just getting smarter and smarter the whole time. So we're going to sort of discover, or really like uncover, reveal what's already there, your untapped power. You have access to this class, you have access to the chat room, and you'll see in the chat room there's a lot of talking and stuff like that takes place outside of these hours in the general tab, and that's mostly in the Market Taker Live Advantage Group Coaching. So this is normally a $349 class. If you join now, I'm going to give you a special trial, and I need to actually.
So we're going to pause it right there because that is a recorded training session. It's a paid session called, this is the type of training that Dan Passarelli does every week. It's called the Market Taker Mentoring Trade Smart Workshop. And tomorrow he's going to be talking about his vertical spread trading plan. You can join him live tomorrow and every Thursday at 4:30 p.m. Eastern by joining the Trade Smart Workshop for just $27. That was kind of a gift to you guys. He's promoting on that webinar, on that video right there, he's promoting their live coaching. So I highly recommend that you take a look at this. I'm going to put out a link right now. This is the link that you would be able to get that $27 deal for a month of the Trade Smart workshops. And that is some really good information. I know it was very specific, but we just felt that it was really powerful training for you to see, like, go behind the scenes and see what is actually being done. So our next panelist is here and he's waiting in the wings. So I'm going to switch out of our video and go back to our show. And our next speaker is Dave. Dave, please forgive me. I have spelt your name wrong on your speaker panel there. Dave's last name is spelled Lukas, and I thought I fixed it everywhere.
Weird guy with a K.
Yeah, you had to be different, right?
That's right. Kind of goes with my trading style, so.
All right, well, let me just see. What did I get told? Okay, so Dave's with us of 12-minute trading.
You guys can see me now.
Professional trader, income in just 12 minutes a day. He's a serial entrepreneur, best-selling author, investor, and founder of 12-Minute Trading. He's also the founder of the top-rated podcast, The Misfit Entrepreneur, reaching audiences in over 100 countries. His companies have been ranked on the, and I have a hard time with that word. You can't tell that, right? Entrepreneur 365, and Inc. 5000 list 7 times. Wow. Dave started 12-minute trading almost 20 years ago to create professional trader-like income without putting in professional trader-like time. That's a good thing. By stacking the odds in his favor. There you go. His unique way of approaching the markets has helped him achieve win rates of over 90% annually, and he's published his track record going all the way back to 2013. Dave, thank you for joining us. And do you like to have questions on the fly, or do you like them held until the end?
Yeah, I'm actually going to cover that here in a second. I think I need presenter control so I can share my screen though.
Yes, you do. That's what I was
There we
doing.
go.
And if you like to have questions on the fly, then I also need to make you an organizer so you can see the questions.
Make me an organizer. I'm going to probably cover them at the end. It's a pleasure to be here
Okay.
with you and everyone today at the event. And I'm excited for the time that we're going to show you a way of kind of looking at markets and trading, probably different than most of you are used to. I do want to make sure, I'm going to go off camera in a minute when we get going here. I'll come back on at the end, but can everybody see and hear me okay? You can just type yes in the chat or the questions box. I can see it over here. Make sure.
Looks great.
Looks like we can. Excellent. Awesome. All right, guys. Well, I'm going to go off camera and we're going to jump into these. I've got a lot to cover and I've got about 45 minutes or so with you. So I'm going to try to get it all in and really, show you guys what this is all about. So first and foremost, tortoise and the hare. Okay, we all know the story. And what's the moral of that story, right? Going too fast out of the gate is rarely sustainable. Slow and steady wins the race. But how many people apply that to trading? Most don't. Most traders, are like the hare. They're trying to have it all right now. Actually, I just had a coaching student just before this. We were talking about, that and trying to get too much out of the gate versus the slow and steady methodology. And so let me share a little bit of stats with you that I think are pretty eye-opening. Okay, 60% or 80% of traders quit within their first 2 years. Among all day traders, nearly 40% day trade for only 1 month. Within 3 years, only 13% continue to day trade. After 5 years, only 7% remain. The average individual investor underperforms a market index by 1.5% a year. Active traders underperform by 6.5% annually. Day traders with strong past performance go on to earn strong returns in the future, though only about 1% of all day traders are able to predictively profit net of fees. And profitable day traders make up a small proportion of all traders, 1.6% in the average year. So after seeing those stats, I can understand how it may be a little discouraging, and many of you can probably relate to some of them. I know I can. I was like a lot of those trading stats when I first started out. What I'm going to share with you today is a different way of looking at the markets. In fact, for many of you, a different way of looking at trading as a whole. But those of you that have been around the block for a little while are probably immediately going to see the power in the trading philosophy and the strategy that I'm going to share with you today. But if you want more consistent income from your trading, you have to have a strategy for consistent, healthy returns. It's the tortoise and the hare story. Slow and steady wins that race over and over. And that's why when you look at the wealthiest investors of our time, people like Warren Buffett, Carl Icahn, Ray Dalio, and others, their approach is smart, healthy, and consistent income. They spend a lot more time on risk and managing risk than they do actually trading. They find an edge and they use it to their advantage to create that asymmetric risk and reward. And that's why Warren Buffett's famous for his 2 rules, right? Rule number 1, never lose money. Rule number 2, never forget rule number 1. So part of what I want to do today is kind of put you in the driver's seat and show you the complete package of how to set up a consistently profitable trading business, complete with my own trade examples. And let me start by sharing some of the things that I wished that I had learned when I first started trading, because to me, it's crazy how much we set ourselves back as when we start out trading, thinking we need to do so much more than actually is needed, right? So it doesn't have to be hard. It doesn't have to be complicated, and it certainly doesn't need to take a lot of time. When most people start trading, they think they need all this sophisticated software, chart setups, 15 monitors, and on and on. And it is, in a lot of ways that people teach it, pretty complicated. And as humans, we tend to make things more complicated than they need to be. I've been guilty as much as anybody else, but I also learned the power of simplicity a number of years ago, and it's paid off 100 times fold for me. In fact, I'm not embarrassed to admit that I still don't know what most of the Greeks and combinations like double diagonal spread or reverse iron albatross actually mean. I found that the more complicated I made trading and investing, the less money that I made and the more effort that it took to manage. So on the contrary, the more simple the strategies that I use with a slight edge, the more money that I made. So let me give you an idea of what I mean. Did you know that it's incredibly easy to put the odds of winning in your favor just by the types of trades you select to do before ever even placing a trade? Did you know that there are strategies that make money for you no matter what the market does? Have you ever wondered how companies like Goldman Sachs and others seem to just quote unquote print money? And lastly, have you ever thought there has to be a better, easier, less time consuming way to make money in the market? Your goal is not to beat the big guys, because in reality you can't. You can't be faster than the pros and the quants who, they pay millions to lay fiber optic lines to their trading floors so a trade executes just a half second faster. But what you can do is win by trading in the margins, not with them, not against them, right? And that's what I'm going to show you how to do today. You're going to learn that you can beat the big guys because you're smaller, you're more nimble, and you don't have to play their game. But first, a little background. Yeah, that's me about 20 years ago. I started my first business with nothing. I had to work 3 other jobs to make ends meet. I was doing kids' birthday parties on the weekends, dressing up like Blue's Clues and other characters for 15 bucks an hour. I was serving at a high-end steakhouse, and I was bouncing at a nightclub. My typical day would go from about 5:30 a.m. till about 1 a.m. For a short time, I lived in my Mazda until I moved into my aunt's basement and eventually slept on the floor of an apartment. There's a pic of the Red Avenger, as I used to call her, right there. My business did eventually make me some money, about $1,000 a month after expenses, and the other jobs helped me to pay the bills, but I was nowhere near where I needed to be. And I sat down one day and I thought deeply about where I was, and I realized that I knew that I needed to learn what I did not know. So I then decided to take action on what to do about it, and I went on a 5+ year journey to learn from the most successful and wealthy. During this time, I sold that first business and I made essentially nothing. I went to work in the Fortune 500 space in sales and was very successful, but I spent every extra moment and weekends learning and traveling to meet people like Zig Ziglar, Tony Robbins, Brian Tracy, and networking to meet with millionaires and even a couple billionaires, all with one goal: to learn the best secrets and processes for success in all areas of life. As I learned things and I put them into practice, I started to have even better results. I started investing in real estate and other businesses, some of which I still own today, and teaching people what I learned. After enough prodding, I wrote a book about the whole experience and what I'd learned that became a best-selling book on Amazon called The 10-Year Career. And because of putting what I learned into practice, I've been fortunate to do business with, speak to, and work with many of the world's largest companies and organizations, and travel the world to dozens of countries and places, as well as have companies, as you guys heard in the beginning, that have been on the Inc. 5000 list of fastest growing companies at Entrepreneur 360 7 times. But the greatest journey of my life happened about 14 years ago when my wife and I decided to adopt, and eventually several years later, traveled to bring our daughter home from China. Everyone, or if anyone here has ever adopted before, you know how much time the process takes, and especially international adoption, how much it costs to do everything needed to bring your child home. At the time, I was actually highly invested and leveraged. I had put a huge bulk of my wealth into what became my largest company, and excess cash at the time was hard to come by. I had a home equity line and that sort of thing. I was determined not to have to quote unquote finance my daughter. So I got back into trading the markets. My goal was to create a strategy that I could do alongside everything else I had going on that could help fund their adoption. And the 12-minute trading strategies were the result of that. Nowadays, I've been fortunate to sell off some of those large businesses built over the years, and now I focus my time and attention on helping people just like you create financial independence through trading the markets, as well as enjoy spending more time with family and pursuing one of my ultimate passions, Ironman racing, which at this point I'm ranked top 5% in the world. In fact, it's amazing how racing the world's most prominent endurance race has helped me to become a better trader and cement some of the principles that I'm about to share with you today. So let's jump into those. I'm going to cover this in 3 parts today. Okay. First, I'm going to share the secrets of the rich that I learned over my 5-year journey and how they relate to trading. Second, I'm going to share the 12-minute trading philosophy with you and how in just 3 simple steps you can change your whole world in trading. And then lastly, I'm going to walk you through one of the most popular strategies that I teach. It's called the double-double strategy. All right, so let's jump into these things. First and foremost, secrets of the rich, part 1. So in all of my work with top investors, business leaders, entrepreneurs, I learned a very few important things. And the first is the successful and wealthy think differently. The successful and wealthy do things differently. And the successful and wealthy understand that success is a process and there are certain secrets that get you to higher levels exponentially faster. And that brings me to secret number one. Your mind is your most powerful asset that you have to become wealthy. Your ability to think and find ways of doing things that either build upon what has been taught by those that have come before you, or to take a concept and create a new way of doing it that gives you an edge is something that we as humans have a unique ability to do. I found that many of the rich and most successful don't always invent entirely new ways of doing things. Instead, they look for ways, small or large, to improve upon things and gain a slight advantage. The best investors do just this. They know even the slightest advantage can give an asymmetric, think massive, return on risk. This was an important lesson for me to learn and was critical in creating the 12-minute trading strategies, because just by asking how can I create an investment strategy that consistently pays me a great return and doesn't require me to spend hardly any time doing it, and that I can manage from my iPhone, spurred me to start looking at how I can take common trading strategies and make them much more effective for me. And that brings me to secret number two. The rich look for, or they focus on, results. The rich don't work for time, they work for results. This is an important lesson for investors, as it doesn't matter how much time you spend in front of a computer screen looking at charts. What matters is results. And I have a confession to make. For all that I've done and that I do, I'm actually pretty lazy. I want to put in the least amount of time possible to get the most results possible. In trading, that means the most amount of money possible with the least amount of time. For some people, that is a really hard concept to grasp. I'm from the Midwest, where we have the Midwest mentality that you work hard and long hours to get success. And in today's age, that's just not the case. People become wildly successful just by having a large following on Instagram, YouTube, or TikTok. I know people that work really, really hard, but never get ahead. You not only have to work hard, but smart, and you got to make sure that what you're working on is the right vehicle to drive the results that you want. The actual time that you put in doesn't really matter to anybody. This was so important in creating the 12-minute trading strategies, as you're going to see that some types of trades give you so much more of an advantage that just by choosing to trade them, you not only can stack the odds in your favor, but you can also cut the time that you spend from a trading screen by 80% or more. That brings me to secret number three. The rich look for leverage. This is one of my favorites, and it goes with the last secret of focusing on results. Leverage, simply put, means doing more with less. In order to grow your results larger and larger, you must be able to leverage your time and resources to do exponentially more. And that means getting the results of 10 hours of work in 10 minutes, right? 5 minutes. And you can do that every day. My results and the results of people that I've taught all over the world have proven this. Leverage can come in so many different forms. Businesses build systems, intellectual property, trademarks, patents, rental property, books, this presentation, right? This is being recorded. It can be watched over and over. That's leverage, right? And of course, the stock market. So let me give you an example as it relates to trading and investing. There is not much leverage in buying and holding a stock or an option. I know that sounds crazy, but I want you to think about it this way, okay? If you buy a stock, how do you make money? Right? We're just talking about buying a stock or an option. It has to go in the direction that you want to go, or a stock has to go up. So that means that you have a 33% chance of making money just out of the gate. If you've got no edge, no strategy, nothing in place that allows you to have an edge in the markets, you have a 33% chance of making money by buying a stock or an option. To put that in perspective, the odds of winning at a blackjack table in a casino in Vegas are 46.36%. Okay, you are literally better off taking your money to the casino versus just buying a stock or an option, especially if you have no strategy, no edge, and no trading system to help you with that. And when I realized that, it was a huge epiphany for me, which I'm going to talk about more in a second. But first, secret number 4, okay? The rich are in control. The most successful and wealthy take control of their lives and their wealth. They do not let it be dictated by outside sources or events. They take full responsibility for their actions and their results. And to me, when I finally understood this, it meant that when it came to building a business or trading a strategy or anything, that you cannot leave any stone unturned. You must set things up to account for everything and have control over the whole process if you want to be consistently successful. And that's why it wasn't just enough to learn that buying a stock or option is a bad idea. It was creating the system around all the aspects of the trades that I was going to do that would make the difference. And that brings us to part 2, a 12-minute trading system. In this section, I'm going to show you to set yourself up for better success in your trading and your investing. I'm also going to show you a unique way of looking at investing in the market that you're not going to hear anywhere else. And I'm going to cover things pretty fast because I want to be conscious of time and everything for this today. But remember, at the end, I'll answer any questions you have around it. So, go ahead and you can type them in now if you got it, but I'll answer them at the end. All right. So once you decide to become successful and wealthy, one of the best forms of leverage is to study those that have made it and use what you learn from them to help you accomplish the same results. Looking at the Forbes 400 wealthiest list, immediately something sticks way out. The vast majority made their fortune in one of 3 ways or a combination of them. They either owned or built businesses, they either did it through investments, or they did it through real estate. Successful market investors understand the other 2 areas, right? Investors understand how to build businesses and they understand real estate, which has a lot of leverage that the wealthiest use to gain their wealth, and they use principles from those areas to succeed in the market. Essentially, they leverage the secrets from these areas to help them at a higher level. Great businesses are simply a collection of systems and infrastructure that work symbiotically with each other and can continue to grow and produce on their own without the founder or their owner being there, right? A trading business should be the same. Would you like to have a trading business that works for you without you having to be there every second looking at the market or worried about your trades, right? Would you like to be able to better fund the life that you want? And I bet I know the answer. And so with that in mind, the 12-minute trading system can be summed up in 3 simple steps. Step 1, put the 67% odds in your favor before you ever make a trade. Real traders know how to find and maximize an edge, and that's what we do here at 12-minute trading. When I realized that you have a 33% chance of making money in buying, the first thing that I thought was, well, who has the 67% chance? Because that's who I want to be, and that's the sellers. I only sell options because it turns me into the house and not the gambler. I'm basically selling to the suckers in the casino, and the house over time always wins. When you sell something, you get paid. So I'm always getting paid up front to take on any risk. And lastly, selling gives me control. As you'll see in just a few minutes when I take you through the double-double strategy, I don't have to be right in calling a stock or market direction. I play in the margins where the others don't. Step number 2, increase those odds by having a solid, tested set of rules for entry, defense, and exit. Over the years, I've developed specific criteria for entering trades that helps me maximize my trades by giving me an over 90% plus win rate. And I track and share all of my trades, as they said, going back to 2013. But with an over 90% win rate, that means that less than 1 in 10 is going to have an issue and get in danger of being attacked. So while that happens rarely, I've got a whole set of defensive rules that I employ that helps to ensure I stay profitable. And lastly, I have a clear set of profit targets for exit that I stay disciplined with. Okay, step number 3, focus on consistent cash flow through base hits and not home runs. I focus on consistent repeatable returns, or what I call base hits. And I achieve them over and over again. And these base hits add up to home run-like returns over time and make for a nice, consistent cash flow business without the typical roller coaster ride of winning one trade, giving it all back the next, and so on, like a lot of traders experience. I have proven that these strategies can and do win over 90% of the time, even in bear markets. In fact, as many of my students know, year to date, many of our strategies, including the double-double, which I'm going to show you in a few minutes, have not had one losing trade. And that's the power of selling options, because you don't have to be right. You don't have to call a direction or hope that it'll work out. You can make money no matter what the market does and no matter which way a stock or an index goes. And you can do it in less than 12 minutes a day. And for some strategies, I trade just once a week to achieve my goals. All right, so to sum it up, by choosing to sell options, I put the odds in my favor at 67%. I increase those odds to over 90% through how I enter and manage trades, including using my proprietary indicators and time-tested rules. I effectively become the house selling to the suckers in the casino, creating consistent cash flow from the markets, and I do it in less than 10 to 12 minutes a day. And the best part is you can do it too. I had to work a good old Rob Schneider cameo in there somewhere. Hopefully you are starting to see the power of looking at trading in this way. And that brings me to part number 3, and that's the 12-minute trading double strategy. There are 5 different strategies that I employ as part of the 12-minute trading weekly advisory service that cover everything from weekly cash flow to passive hands-off income over 6 to 8 months. I'm going to show you one of the most popular, and that's my double strategy for monthly income. So to kind of set this up, it's an iron condor strategy to maximize cash flow. It's designed to stack the odds in your favor for income over a 4-week or less period. It targets a 4% return on risk. It's traded every week. My trades are set up on Sunday evenings in 10 to 12 minutes as good to cancel orders. They typically fill Monday in the AM, and the average time in a trade is actually 2.1 weeks. All right, so why is it called double? The strategy is designed to double the trading capital allocated to the strategy in the course of a year. So simple math, if I am making 4% minimum return on risk every 2 weeks, that compounds to a little over 100% return per year. Now, obviously that's the goal. As I mentioned, with a 90+% historical win rate on my trades, that means not every trade is going to work out. But how many of you would be happy with a 70% return? Or 50%, heck, maybe even 30% on your money in the course of a year, spending 10 to 12 minutes per week to set up your trades. So let's walk through one of these trades and how they work. All right, I set these trades up on the indexes and the index ETFs. I use the SPX, the NDX, the RUT, the SPY, the IWM, the QQQ, and the DIAs. I like the SPX, the NDX, and the RUT the most because they are European style options, which means you can't get any early assignment or anything like that. This is a chart of the SPX that I grabbed actually just yesterday. And working with my mastermind group at 12-minute trading and other professional traders, we've actually done an exhaustive analysis on the max movement in a given time frame for each index. So I know what the max move up or down over the last 5 years is for all the index time frames, from 1 day to 1 week, month, all the way out to a year, right? So if you say, hey, Dave, what's the max move on the SPX at 7 months? I can tell you exactly what the max move up and the max move down is, right? Remember me talking earlier about increasing my odds, not just by selling options, but my rules for entering trades. This is part of increasing those odds. I look for the chart that allows me to place my trade outside those max move levels and still pay me my 4% return on risk. And also, do you remember from the beginning about me speaking about how the simpler we make our trading, the easier it is to win? I use only 2 indicators, the Bollinger Bands and my proprietary energy indicator. And here's why I like the Bollinger Bands. They act like the ropes of a boxing ring. They typically, when the price gets to them, keep the price inside them. The bands essentially throw the price back in. Think about a boxer hitting the ropes and being thrown back into the ring, right? For the double strategy, I like to set my trades up, not just outside those max move levels that I spoke about, but also make sure that they're outside the Bollinger Bands on the weekly chart. So as you can see on the screen, the SPX weekly chart, the upper Bollinger Band is 43.13 and the lower is 35.21. The trade that I use for the strategy is called an iron condor. A lot of you have probably heard it before, probably even traded it, right? But for those of you that do not know what an iron condor is, it is simply selling a call spread and a put spread on a stock or index that's the same size and in the same cycle. For this example, for this trade, I'm going to be selling the December 16th cycle, which is about 4 weeks out in trading days. The example that I'm going to use is a $10 wide iron condor on the SPX, meaning that my risk is $1,000 per contract. My goal is to make a minimum of 4% or $40 per contract. I do different sizes each week, ranging from 10 to 50 wide for this strategy. Since I know that I need to be outside the weekly chart Bollinger Bands and also outside my max move parameters, which you can see on the screen are 43.83 on the call spread side and 35.21 on the put spread side, my job is to see if there is a setup that allows me to do that and get my 4% net credit, right? Or sorry, 34.88 on the lower side for the max move. 35.21 is the lower Bollinger Band. All right, so when I look at the options chains, which I did yesterday evening, I can see that I can sell the 16th December 2022, 34.25 by 34.35 put spread for 35 cents. which is well below that 35.21 lower Bollinger Band on the weekly chart and well below the 34.88 level based on the max move data. In fact, the example that I'm going through is probably going to be pretty close to what I share in this weekend's newsletter with students. You're also going to notice that although my target on the trade is to make 4%, I'm selling this side of the condor to pay me 35 cents or 35 bucks per contract. Remember, I have the other side to still sell and get paid on. And this is one of the great benefits of the iron condor, which I'm going to expand more on in a second. But first, let's discuss the call side. Okay, so when I look at the options chains, I see that I can sell the 16th December 2022 4400 by 4410 call spread for 40 cents, which again is well above that 4313 upper Bollinger Band on the weekly chart and well above that 4380 level based on the max move data. And with the put side, although my target on the trade is to make 4%, I'm selling this side and I'm getting 40 cents, right? Or 40 bucks, right? So my total credit from selling the iron condor is going to be 75 cents per contract or $75 per contract or a 7.5% return on risk for $1,000, right? That's the beauty of the iron condor. You can profit off the same risk on both sides. A lot of people will sell put spreads or call spreads, and these can do well, but they're missing the leverage of the condor, allowing them to profit from the same amount of risk in both the top and bottom side. So why doesn't your broker set aside $1,000 in risk for both sides of the trade, right? A lot of people are like, if I sell options, my broker sets aside money. So if I only using the same $1,000, why doesn't my broker set aside $1,000 for both sides? Well, if you think about it, you're only going to lose, if you're going to lose on the trade, and that's where the price of the underlying goes through your sold strike and your spread. You can only lose on one side expiration. You can't be at both places at once, right? The trade cannot be in two places at once. And so that's another form of leverage that allows you to make more in a trade. And if you remember, one of the secrets of the rich was that they look for leverage to help them succeed. So I like to get 70 to 80 bucks per contract. So 70 to 80 cents, per each 10 wide condor in the double strategy, because it allows me to exit earlier by using some of that credit to buy back the trade early and then turn around and put that money back to work with a new double trade. And that's why the average time that I'm in these trades is 2.1 weeks instead of the 4 weeks that I've sold it out to. Every day that price is not at the strikes of the condor, because they're an option trade and they have time limits to which they expire, they're losing value. They're getting time decay. And after a couple weeks or so, I can buy them back for 10 to 20 cents, exiting the trade early, ensuring my 4% profit goal. And once I'm in the trade, there's not really much for me to do but let time work on it until it exits per my exit orders. Of course, I have other trade management rules. I have defensive rules that I use to ensure success, on the trade, risk exit levers and things like that, if that were to happen. But I don't have a lot of time to go into that today, but hopefully you can understand it's very rare that I have to employ those anyways. And you can see the power of this simple strategy to create a monthly income in really an easy, consistent way with minimal effort each week. All right, so let me kind of sum this up for you. Per my analysis of the weekly chart Bollinger Bands and max move data, I choose the best index or index ETF to sell the double iron condor on each week. I sell in 4-week cycles using the weekly and regular monthly option cycles. I set up my trades as good to cancel orders on Sunday evenings. I target a 4% return on risk for the trade and typically sell my positions to give me a little buffer of credit. I use that buffer to buy back the trade for 10 to 20 cents, usually in about 2 weeks. And once I'm in the trade, there's really not much that I need to do but let time work for me. So what are your risks, right? Well, one of your sides of the condor could get attacked, causing you to lose that side of the trade. It's not impossible, but the double is set up from the beginning to start with an over 95% chance or better of winning. I've got defensive rules, as I alluded to, that I employ well before being attacked that ensure I can either exit for a profit or get out and win the trade and not have to deal with getting attacked. So now I've covered that, can you see that the power of this type of strategy? Can you see the leverage in using like an iron condor and doing it this way and knowing the max move data and being outside the Bollinger Bands? And you can kind of see how it all comes together, and you're putting the odds in your favor from the start just by choosing to sell options, right? So you can see that it can give you leverage in the market and it can allow you to create steady monthly income instead of just buying a stock or an option and hoping that it goes the way that you want it to. And Another question is, can you see how understanding the system can help you get more control over your income and provide great returns? Lastly, and most importantly, can you see the power of using a strategy like the double-double to create an investing system that can work for you consistently with just a small amount of effort each week? You see, you can have a professional trader-like business without spending professional trader-like time. Using the power of leverage and focusing on utilizing the trading strategies that take me 12 minutes or less per day to manage, I figured it out, and I now trade that system and strategies like the double-double that I've shared with you, allowing me to enjoy my life, create great income, and really do it from wherever I am, just in a few minutes a day. All right, so how does this break down to 12 minutes? A lot of people always ask me that. Well, it takes me about 6 minutes to analyze and check the charts for the key levels on the Bollinger Bands. It takes me about 2 minutes to check the options chains to make sure they are giving the required return. About 1 minute to set up the trade, most of the time less. 2 minutes to check in and see when it's filled. 1 minute to add my good to cancel exit order. And truthfully, most days it takes less than that. And I can do it all from my smartphone or iPhone or wherever I am. So it's very consistent, it's very easy, it's very systematic, right? That's one thing that I will say about getting rich in the markets and wealthy in the markets. It's not flashy, it's not sexy, it's water dripping on a rock. It's simple, repeatable, just over and over and over and over again. And then those base hits, as I said, add up to incredible returns over time. All right, with that being said, let's summarize everything that we've gone through today so far. So in part one, we learned that the successful and wealthy think differently. The successful and wealthy do things differently. The 4 secrets that set the successful and the wealthy apart. And lastly, we discussed the power of bringing these together to create a winning system. In part 2, we talked about how the super rich make their money. We talk about how top investors learn from the business and real estate worlds and use that information to help them better succeed. We learned the 3 steps to create trades that win over 90% of the time. And lastly, you learned by setting up a trading business built on selling options and stacking the odds in your favor, you do not have to be right and you can still profit. And then in part 3, we reviewed the double-double monthly cash flow strategy. We discussed the leverage of iron condors and the benefits of them when used for a strategy like the double-double. And we discussed how this can be done in 12 minutes or less each week. And then we also discussed how you can easily set up and manage a strategy from anywhere using your smartphone, creating consistent income in the markets. All right, by now, you're probably wondering about this, but what if I told you that you could put a secret of the rich to work for you and have even more leverage in that everything I just went through could be packaged up and done for you and delivered on a weekly basis to your inbox, complete with video analysis, trade setups, and access to me and my team? Would you be interested in that? I bet you would. And that's what we provide our students in the 12-minute trading advisory weekly service. You literally get to look over my shoulder, trade alongside me and my team each and every week. The service includes 5 different option selling strategies, from selling weekly options for income to monthly options like the double-double, all the way up to 6 to 8 month cycles designed to be more of set it and forget it as much as possible. The goal is consistent passive income with little to no effort, base hit after base hit. And if you're new to this style of trading, we provide all the training that you need, as well as live training sessions with me and our other experts throughout each month to help you learn and become successful. I have worked extremely hard to make the 12-minute trading weekly advisory service the most comprehensive and best value service in the marketplace. We deliver everything. I mean, everything. A service that includes, as I said, 5 different short and long-term strategies that are tested and proven to work in any market. Weekly advisory newsletter, complete with market overview and my personal trade setups that I'm doing every single week. I do not share any trade that I am not personally doing myself with my live money. Weekly video analysis of the market and trade setup so you can look over my shoulder to see exactly what I'm doing and why I'm doing it to accelerate your success in learning the strategies. Midweek update with trading game plan. I do it every Wednesday. In fact, it comes out tonight at 5 p.m. Trade alerts for any move that I make on any of my trades prior to me taking action. Comprehensive student portal complete with video training on every aspect of each strategy and other resources to help you improve your trading skills. And like I said, live training sessions each month where I teach on the different strategies and where you can attend and ask questions, get guidance, as well as special members only events, all for just $97 a month. I don't do this to make a ton of money, guys. I do this at this point to cover the costs of it and to help other people learn what I've learned and be able to have the amazing things that I've been able to do in my life learning this stuff and what I've learned from others and share it with you. That's why I love to do this at this point in my life. And as a special gift for attending this event and spending time with me today, I'm going to give you a free 2-week trial of the service. All you have to do if you want to take advantage, just go to 12minutetrading.com/TE. Okay, so 12minutetrading.com/TE. It is the full-on trial. You get to try out and see everything. After that, if you want to continue, it's just $97 per month. You can cancel at any time. So, you literally have nothing to lose. One contract of just one of the trades that I do typically every week pays for it. And so again, all you have to do is go to www.12minutetrading.com/TE and, kick the tires. This isn't for everybody. So, find out if it is for you. If it's not, hey, that's okay. It's just, it's one of those things that I think is important that, you can't really know if something works for you unless you try it out and test it out, get to see what it's really all about. So take 2 weeks free and put it to work for yourself and would love the feedback. So I'll open it up there for questions. I'll come back on camera on the screen. So hopefully you guys can see me okay. Yep, there I am. Do we have any questions out there? Pull up the chat here and see. Are you guys seeing any questions or am I missing this? I'm not seeing the questions box anywhere.
I'm not seeing any questions. Sometimes
All right.
people listen with an ear while they're working. So
No
guys,
worries.
I need you to listen up. And if you have questions for Dave, now's the time to ask him. He's got about 9 minutes left. What a great presentation. Thank you.
Oh, you got it. Thank you guys for attending and listening to me drone on for the last 30 minutes.
There was no droning at all, so don't say that. All right, so let's see. I'll be honest and let you know that I was over here working on a different project. So is there anything
right.
in your presentation that you want to like double down on or remind us about?
I think the most important thing is that we make things way more complex than we need to. The simpler that we make trading, the more profitable we're going to be, the easier it is on us. I mean, you truly can trade. I mean, trading like 10 to 12 minutes a day. And that's the whole point of this, creating that. I was working 90-hour weeks when I started doing this. I was building multiple businesses and everything I had going on. And I had to find a way to seriously time crunch this down and gain leverage to do it. And, spent couple of years, trying this, trying that, figuring it out, putting all this stuff together. But, once I did it, like clicked and just, nailed it. And it has ever since. And so I think that's the important thing, guys. Don't make it more complicated than it has to be. Find a way to stick the odds in your favor, whether it's selling options like I do or something else, but give yourself a really solid edge because the markets are highly competitive. You're going against the best of the best every day. So if you don't have a way to, especially if you're going head to head with them, if you don't have a great edge, it's really hard to win consistently. So that's why I like playing in the margins where they're not. Right? Go ahead. In this case, the one we were just talking about, go ahead and, waffle around below 4,400 and above, 3,300 and change. Go ahead and do that SPX, knock yourself out. I don't care, right? Just stay in between there and I'm good to go. And frankly, that's what happens each and every week. So, for me, I think that's the most important thing. Simplify, make it easy on yourself and enjoy your life.
It is really simple to get caught up and lose track of how much we're actually working, isn't it?
Oh my gosh. It's amazing. And a lot of times we work for work's sake.
Yeah.
We have this extra time and it's like, we got to fill it with working,
Right.
or something like that. Like, go, you don't, right? You hit your profit target for the day. Like I hit mine today, first thing in the AM, I'm done. I sold my weekly trades, made my profit target and I was out and, did it in about 15 minutes. Now I'm having fun with you guys and, got another Ironman training session this afternoon I got to do.
Awesome. That is awesome. Well, I'm not seeing any questions here. Guys, I just put the link to the 12minutetrading.com/TE. Now, do you
Yeah.
want them to go to your website and work through your support and your contact channels, or do you want to give them your email? How do you want to do?
Yeah, actually, I mean, support at 12minutetrading.com. If you have any questions or anything, if you take advantage of the trial, you can get access to us right in there. In fact, for everything we do, you can sign up for our text alerts. We text alert everything that we do and stuff too. So, like I said, kick the tires, get in there, see if it's for you. Go through a couple weeks of the newsletter, see if you like it, see if it makes sense for you. Don't hesitate to answer or ask any questions. We typically answer them in less than 24 hours. So give us a shot. Let us know what you think, and happy to have you aboard.
Well, thank you so much for joining us, and I really hope you'll come back again next year. We're going to be changing up the format a little bit, and I'll be sending you details on that.
Okay.
And I hope you have a wonderful holiday season.
Thanks, and everybody too. Have a wonderful holiday season. Enjoy the time with your families, and look forward to seeing you in this week's advisor newsletter. It comes out Sunday at 5 p.m. So see you then.
All right. All right. You have a good day, and thank you.
Thanks, guys. Take care.
Bye now. All right. Now, that was Dave M. Lukas, Lukas, of 12 Minute Trading. And I hope you'll take advantage and go check out his offer. And we're also going to revisit the fact that we will be putting up a recording of today's webinar. It's at tradersexclusive.com/archived_webinars/. And you'll be able to see all of our Traders Exclusive content where we did webinars, and we have articles, videos. Contributors have sent in different items. We've got a free ebook on our website. We've got a lot going on there, and I hope you'll take a look around. Don't let the website fool you. The content is cutting edge, and there's a lot of history there, but also you'll be seeing a new Traders Exclusive coming up very soon. So I think that we're ready to introduce our next speaker. And let me just move to the right place here. There we are. Tony Pawlak of Real Life Trading is joining us now. He's going to talk to us about the mindset of a consistently profitable trader. And he's an options instructor at Real Life Trading. So I guess today was options day here at the Traders Exclusive Live Strategy Series. And full-time trader, and he's helped hundreds of people replace their income through trading. So Tony, you need to fill that out a little bit for us, and welcome. Thank you for joining us.
Thanks so much for having me. Can you hear me okay?
I can hear you fantastically. Let me make you the presenter so you can share your screen and your webcam if you like. And do you like questions on the fly? And do you want me to? Okay.
Yep,
I'm
totally
gonna
down
make you
for
an organizer
questions.
so you can see them. It's a real low-key day here.
Let me get my webcam.
But we are
good.
going to be posting a recording of this, so
Okay.
have at it. Take it away.
Sounds good. Let me get this thing turned on so you guys can see my gorgeous little mug here. There we go. What's happening, everyone?
Yay.
I'm actually honored to be here. I cannot wait. I love to pour as much value as humanly possible into you guys. And so I think this is probably sharing my whole screen. So let me pull that onto my whole screen there. There we go. Real quick, let me get this chat. I'm sorry, I'm just getting used to this little thing here. So I just want to make sure my chat is up. You guys are welcome. There we go. You are welcome to throw any questions you have at me. I'm happy to answer. I don't know everything. If I don't know it, I'm going to tell you I don't know it. But I do have thousands and thousands of hours of coaching people how to trade the stock market behind me. I've been doing this for a very long time. I am a full-time trader. Let me talk to you a little bit about my story for just a few minutes, and then I want to dive into this mindset, because honestly, this is probably the #1 thing that people mess up the most. And it's one of the biggest reasons why you're not consistently profitable. So I can't wait to share that with you. My story is a wild one. And sorry, this is just a blank screen. I love to just write on my screens, and that's what we do. So we'll go over that. But my story is a little bit unique. At the exact same time, it's pretty common. I worked an 80-hour week job. I ran a business. I was not happy. I had no life. I wasn't doing anything except for working. And it was a struggle. And I had this feeling like I should quit my job and trade full time. At this point, I've been learning the stock market for like 6 years. And I was like, I am ready to do this. I make some money. I know I can make money. Let's make this happen. So I quit my job. My entire family is like, you're the biggest idiot in the world. You're just going to lose everything. And I was like, I feel like this is what I'm supposed to do. I quit my job. I moved to Utah. That's where my wife's family's from. So we get a whole new fresh start. And I have all of $30,000 in my trading account. And I'm like, I'm going to be a millionaire tomorrow. Like, it's going to happen. I think within weeks, I was down more than 50% of that account. Okay. I then we had savings set aside to cover things. We cleaned out our savings. We loaded it back up into the trading account, and we went again. And another couple weeks later, that was gone. So I go, okay, well, I've got good credit. Let's go take a loan out. I take a loan out, build up the account nicely. Within a month and a half, that was gone. Took out another loan. Same exact story. I was bleeding money. I mean, we were so broke that we honestly couldn't afford ramen. I mean, we seriously had $20 a week for groceries. We went from extremely comfortable to about to lose everything. We have a mortgage, car payments, have everything, and nothing is coming in for months. And I have completely wiped out of everything that we have. Okay. I laid in bed just crying every night, just trying to figure out what the heck to do. There were so many times that I could have given up. And I decided to get back up. Every single time I got back up, within 20 minutes of getting back up, I had an idea. And that idea would push me a little bit more. And I knew how to trade. And this is why I want to talk a little bit about mindset. I knew how to trade, but I was doing everything wrong. I allowed the pressure to step in, and I didn't handle that pressure the correct way. And money escaped me faster than I could ever think. And what was the thing that changed for me? My friends, let's dive into it. Can you see this pen by chance? Can you see that? Let me know if you can see it. Hopefully you can see that. Again, feel free to message on that chat. You're welcome to ask questions, whatever you'd like. Okay, so what was it that flipped the switch to make me get out of this hole? This is the hole that most people can't get themselves out of. Now, granted, I was deep. Most people don't take out hundreds of thousands of dollars of loans. That's still not making it, still not making any money. There's a reason why my wife can buy whatever she wants today, because she was a trooper holding through all of this. It was incredibly difficult. But you either stand up and rise taller, or you let it crumble you. And I learned a lot. I learned a lot about what not to do. And that's why I'm able to coach people, is because I haven't found one thing that someone's done that I haven't personally done myself. In fact, I've probably done it to the 10th degree, right? So I can relate, and I show people how to get out of this hole. Again, I want to pour some value into you, so let's dive into it. What was it? Before I talk to you, and by the way, yes, I did pull myself out of this hole. I found a way to be profitable. And years later, I am living my dream life, doing whatever I want to do. And honestly, what I want to do and what I spend most of my time doing is coaching people on the stock market. People I talked to are in the exact same boat that I was in. I had a few mentors that reached out to me and helped me out when I had nothing, and gave me some direction and helped me to get on my way. And so I like to give back and do the same. I hope when you've made it, you turn around and do the same. How do you play the game? Okay, my friends, if you think about it this way, trading is simply a coin flip. Okay, you've got heads, and you've got tails. All right. So with heads and tails, sorry, let me see here. With heads and tails here, let me make sure I've got this thing. There we go. Good stuff. D, what's up? Get back on track. Okay. This thing back up. If I told you on heads, I would pay you $1,000, and on tails, you had to pay me $300, who would do that game? Who would take me up on that? Yeah, all day long, right? Why is that so easy to understand? Well, because we know basically it's a 50-50 shot. Is there a chance that it lands on tails 3 or 4 times in a row? Sure, but flip that coin 1,000 times and it's going to work out half and half, and you're making way more than what you are losing. My friends, that is trading in a nutshell. Why is it that we fail at trading? The most important thing in trading that you can realize is that you've got to put the math on your side. When you lose, you need to lose small, and when you win, you need to win big. What do most people do? Most people, when they start to lose on a trade, they go, oh, it'll turn around. It'll turn around. No, it'll turn around. It'll turn around without accepting that loss. And so they turn this $300 loss into a $1,000 loss. And what do they do on their wins? Oh my gosh, I'm up $50 in 10 seconds. You know how long I'd have to work to make 50 bucks? I'd have to work hours to make $50. And I just made $50 in 10 seconds. You get out of it. You celebrate, you go post on Twitter, I am the greatest person alive. I'm the smartest person in the world. I just made so much money in 10 seconds. What are you really doing? You're turning this math from a $1,000 win into a $50 win. So what happens? When you lose 1,000. When you do win, you make 50 bucks. You do this over 100 trades and you wonder why your P&L is just in the tank. You wonder why you're just absolutely dying, right? Makes sense. So how do you become profitable? You need to, first off, and again, I can't do this in 45 minutes, but you need to recognize the locations on the chart where you are no longer correct. You need to have a stop loss in place so that when it goes to that area, you can control your loss. You need to be losing, and in this instance, it's 300 bucks, whatever your R is, whatever your risk unit is, okay? So you are going to lose $300. Whenever you win, this is the even harder part to do. You get into a trade and it's working great and it's going and it starts to pull back and you're like, oh my gosh, I was up $700, now I'm only up $500 and it's just sinking and it's going lower and you're like, I should just take my profits. No, what should you do? You need to put the math on your side. You need to hold it out. You need to know where you're wrong. Get out when you're wrong. If you're not wrong, stay in, because odds are this thing is going to your $1,000 target. You're going to put the math in your favor because anyone can make money on a trade. Anyone. Flip a coin. It's like saying I can get heads on a coin if I flip it. Flip it. There's a 50-50 shot. Put on a trade. You've got a 50-50 shot of winning. Where you're going to make money is, can you repeat this over 100 trades? That's going to separate you from everyone else. Okay? 100 trades, are you going to make money? Well, the only way you're going to make money is if you're winning a lot more than you're losing. Not amount-wise, not percentage-wise, right? Because it's going to be around a 50-50 win rate, give or take, on a directional trade. Now, I do a lot of selling of options where my win rate's much more like 90%, but I'm also risking a lot more to make smaller amounts, right? It all evens itself out. If you're going to directional trade with option shares, this math is how it's going to play out. Okay, so now you know how to play the game. This is the simple game. So why is it still so hard to make money in these markets? I'll tell you why. Because we all understand this and go, okay, I just need to flip that dumb coin and I'm going to lose 50 times and I'm going to win 50 times. And so if I lose 5 times in a row, it's just like flipping a coin and having it land on tails 5 times in a row. What's going to happen most likely? It's going to go heads, right? And so a few things. This is where a few people go wrong. Well, what they do is they lower the amount that they're risking. They mess with the math. So if you've lost 3 times in a row and you go, instead of risking $300, I just keep losing $300, I'm only going to risk $100. Well, what happens when you win now? You're only making $200 instead of $1,000. You just lost multiple times in a row risking $300. And then you hit a couple winners in a row, only risking $100. And so you're like, cool, I made like $600 when you should have made a few $1,000. And then you would do what? You up your R back to $300. Like, okay, now I'm winning, which is usually just in time for what? A few more losses to come in. And so you then continue to lose the big amount and only make the small amount. Keep your R the same. Your R should be, you should risk 1% of your trading account, my friends. The only way to be successful in that coin flip game is to risk a very small percentage of what you have, because you know in the long run, the math is going to pay you money. You just need to stick around long enough to see those returns. Most people want to get rich quick. The market punishes you for thinking that way, okay? So it takes your money out, right? And now it turns into gambling. So you are flipping a coin, and on a coin flip, you're losing half your account or you're doubling your account. That's gambling. That's not trading. Trading is you're the casino. That makes sense? You're the casino. You understand that you're going to pay out $1 million jackpot, but you've got $1 billion in the bank. It's a very small percentage of what you have. Realizing that sometimes you're going to be giving out more than you're taking in, but the math works that over time, people are not going to win every time they pull the lever. They're going to lose 99% of the time, which means money will come into your bank account, right? That's exactly how trading works. That's the game. You are the casino. Don't be the gambler. You got to stick around long enough to just let the math play out. All right. So let me give you a few scenarios. Again, this is all cool and it's all so simple. You're like, wow, this is so simple. But what happens when you actually start to trade? Well, you start to trade and you take a win and you're like, sweet, jackpot, right on, awesome. And then you take another trade and you start to lose. You take a loss. You're like, okay, well, no big deal. You take another trade and you start to lose. Okay, well, no big deal. And you take another trade and you win, but you kind of win small because you've been losing a couple and you just think this one's going to lose too. And you take another one and you lose on that one. So now what's going on? You are worried about the outcome of the trade. This is the next problem that people start to face, is you cannot control the outcome of the trade. It doesn't matter what you do, how much analysis you put in, you cannot avoid a loss. Sorry, it's not going to happen. Now, here's where it conflicts, is that no one wants to lose. So I want to flip this mentality that you have and help you to trade with a more clearer mindset. My friends, I am giving away just stupid amounts of value. So please pay attention. I promise you this will make you successful in the markets if you implement it. It's easier said than done. Okay. So I keep getting sidetracked and I need to get picked back up so it's not too jumbled. I'm sorry. All right. So remember the process, heads and tails. Process is simple. It doesn't matter. You're not an idiot if it lands on tails, and you're not a genius if it lands on heads. You're just flipping a dumb coin, and you have the math correct where you lose small and you win big. In trading, it's not the case. We start taking everything personally. As soon as you start worrying about the outcome of the trade, losing and winning, you are screwed. You're screwed. Why? Because you are now going to bring in emotions into this trade. You are going to be scared for one outcome to happen, and you really want one outcome to happen. So you don't accept the fact that there's a possibility that coin could land on tails. You only accept the fact that it could land on heads. So when it lands on tails, you start to feel like the markets are against you. I'm so sorry. You start to feel like the markets are against you, and you start to doubt everything. You start to question everything. You start to overanalyze everything. And you go, okay, well, I've done all my homework and all these indicators are lining up and everything is just so perfect. And I get into the trade. And again, instead of making it win, you just take a smaller win because something started to flip. No, man, that's probably just going to end up losing. And sometimes that's the case. But you start manipulating the math again. You see how it's the original scenario, the original setup. That math is everything. Our emotions start to screw with that math extremely, extremely fast. Most people, when they start to get it, they struggle with winning big because they just can't allow it to do it because they're so scared to lose. They are so scared for this scenario to play out where they lose that they end up messing everything up. And again, focusing on the outcome of the trade is only going to cause you to lose money. And that's why I talked about in the title of this webinar is as soon as you try to win, you will only lose more. Do you start to see why that is the case? Because once you start focusing on the outcome, which you can't control, you're trying to control something that's not controllable, you start to fall backwards. What happened to me? I knew how to trade when I first quit my job. Why did I just get smashed? Why? Because I go, okay, I have 3 weeks to make $5,000. Let's go. I take a loss. Okay, well, now I need to make $5,600. Okay, cool. Taking a little win. Okay, cool. Now I need to make $5,300. I take another trade and I lose big. Man, I need to make $6,000 in like 2 weeks now. I take another trade, so I go a little bit heavy because I got to make some money back, and I lose big on that. Now I need to make $10,000. And you see how it just all of a sudden falls apart. I start to lose big and I start to win small. Stop trying to win on trades and start flipping the dumb coin. Control what you can control. What are things that you can control? You can control, for the most part, the amount that you lose over here, and you can control, for the most part, the amount that you win. You can control what strategy you put on, right? All of things are in your control, and most importantly, you can control how well you execute that strategy. My friends, 99% of the people that I coach have never back tested their strategy more than 15 times, ever. They just go, I've seen that work one time, right? A perfect example is a hammer. I've seen a hammer play out before, and so I'm just going to start trading hammers. Like, this is the golden ticket. Everything works, just not all the time. If you're going to have a strategy around hammers, can you make money with hammers? Are there people that make millions of dollars with hammers? Of course. This candle pattern right here, this candle right there makes people a lot of money. How come it's like, well, how come that guy makes money, but every time I play hammers, I lose money? Well, because you are trying to control the wins and the losses. The only thing you need to do is, first off, find an edge. Back trade this strategy that you've built around hammers. And I'm not talking about back trading it over the last 5 days and back trading it 20 times. I'm talking about back trade this thing 400 times, as far back as that stock will go. There are companies and websites out there that you can go onto a 1-minute chart 50 years ago. They have the data. If you're using TradingView, they only let you go back a few days. That's the reason why most people don't back trade that far back. Okay. So you need to actually back trade. You need some real data, not just, hey, this works right now. It's, hey, this has worked for the past 15 years. It works in bear markets, bull markets, and sideways markets. And you're going to realize after you've back tested, not changing a thing, you're just going to back test these set of rules for 500 times. Done. You're going to have some data sets now. You're going to say, okay, this thing had a 49% win rate. My average win was this. We use R's, so whatever you're risking. So if you're risking $100, your goal is to make 2 R's, which would give you a $200 win when you win and a $100 loss when you lose, right? Math on your side, 50-50 shot, give or take. So you're going to say, all right, I average on my winning trades 1.7 R's and I average on my losing trades 0.5 R's. My friends, that is a math that is going to make you money over 100 trades. No one does this because it's too much work. It's too boring. I just want money quickly. So they go into the stock market and they go, I am super smart. I am so successful in all of my businesses. I'm a college graduate. I am smart enough to do this. And you walk on in there and all you're going to do is focus on the win, and all you're going to do is focus on the loss. On the losses, you're going to beat yourself up because, like, man, I thought I was smart. How come I lost on that trade? And on your wins, you're going to go, I knew I was smart. I won on that trade. And that's where your emotions come in, and the emotions separate you from the math every single time. The hardest part for people to get over, again, my friends, I could teach you whatever strategy you want in the world. If you can't master this, you will never make any money in any strategy that I teach you. And I make a lot of money. I make tons and tons of money. I give out strategies. I give out all this teaching for free. I'll show you where to find it after this is done. I give away all this kind of stuff and people are like, I still can't make any money. This is why. Why is it that I can make money and you can't? Is it I'm so much smarter than you? No, guys, I'm not that smart. I'll be the first to admit it. But I learned the skill of trading. This is simply a skill. And if you can just shift your perspective, if you can shift your mindset from trying to win on these stupid trades because it's going to satisfy some dumb ego that you have, or it's going to fulfill you, or whatever the case is, if you can separate yourself from a win and loss and view it as a coin flip. I don't flip a coin and go, oh, it lands on tails. I'm so dumb. Dang it. No, we just flip a coin and go, it's just going to bounce how it's going to bounce. The only thing I can control is how much I lose on that or how much I win on hits. That's the peak trading mindset. Your goal is to stay in that mindset. If you can't stay in that mindset, then you are going to struggle. And I'm sorry, my face is over here and the camera's right there. So I'm sorry, I'm always looking somewhere else, but that's the formula to success in everything that you do. Are there any questions so far on what we've gone over before I go into this next little step? Things that I look out for when people are struggling. Any other questions, thoughts? I want to make sure that I am seeing these questions. Let's see here. Sorry, this thing is just not wanting to show me it. Hopefully things working out. All right. Sorry guys, it's not really wanting to show me it, your questions or comments. So we'll move on. You can always email me afterwards if you have questions. I'm happy to help out. Okay. The next little step, realize what you're trying to fulfill by winning on a trade. Okay. So, winning on a trade releases a massive amount of dopamine. Dopamine's very addictive. When you're sad, you want it. And so that is a huge driving factor between revenge trading. Is you lose on a trade, and you just will not stop. It doesn't matter that the markets are just you're not seeing it well. You will just melt money until you can finally get that one win, so you can finally release that drug in your brain and finally go, oh, okay. And then you look at your bank account and go, I've lost $5,000. Oh my gosh. And then it immediately releases. You go back, right? There are many reasons why people start screwing up and start focusing on the outcome of the trade. Most of it has to do, the majority is they're scared to lose money. Okay. So you've got reason number one normally is money. The way you view money, it's got to change. Reason number two is usually having to do with ego. They don't believe in themselves. You don't believe in yourself. You rely on outside things. I'm going to draw a little awesome stick figure here. You rely on outside things to determine your self-worth and your happiness. If there's one thing that I am so grateful for when being a trader, is that the markets forced me to change my bad habits, and they have taught me the way to be the happiest in this life. People view the market as it's such an evil, mean thing. It just destroys me. What is the market really doing? If I'm not patient, I lose money. If I'm quick to anger, I lose money. On and on and on it goes. And so it forces me to be my best self in front of the computer and away from it. Because I tell you what, you can't be the most patient trader in the world and then freak out every time you hit a red light driving your car. It just doesn't work. Who you are out there is who you're going to be right here on this desk. So it demands that you become your best self. Most people don't want to face it. And so they just want to go, you know what, I'm smart and I can do this. And all they're going to do is just get destroyed in the markets because they're not willing to face it. The markets taught me, this is what I did when I first started. Man, if I can make all this money trading, look how important I'll be. Look how amazing I'm going to be. My family will be so proud. Everyone that doubted me and said I was an idiot, they would all just be like, wow, he proved me wrong. It's truth, guys. It's the truth. I had my ego wrapped up in everything. I had no self-worth. I had nothing when I first started trading. I relied on everything externally to give me any type of happiness. And I know this sounds dumb. It's like, Tony, tell me about trading. I'm like, this is it. Without this, you're never gonna make any money. So Promise you. It's not just some weird hoodoo. It's the truth. And this is the stuff that no one's going to tell you. I'm giving you everything. Everything, my friends. As much as I can in 45 minutes. So again, if I can see your message, feel free to write on there. I'm happy to answer questions, go over trades, whatever you want to do when I'm done here. The market teaches you that you have to find this from the inside. It needs to radiate from you. Your confidence doesn't come from winning on trades. Your confidence is there because it's you. Once you have this mentality of, I don't need to win on a trade to prove that I'm smart, what are you going to do? You're going to stop caring about whether or not this trade wins and loses, and you're just going to care about, if it does lose, I lose small. If it does win, I win big. Boom. Now all of a sudden the math is in your favor, and over 100 trades, your account's going up, right? Because you don't need something to prove to you how smart you are. I don't need to look and buy all these things to be able to look good in front of someone else. I don't need that recognition and that acceptance. I've accepted myself. The markets taught me that. Because every time I tried to rely on the markets to prove to me how smart I was, they slapped me in the face. And every time I just said, you know what? I'm good. I'm smart. I know how to do this. I'm in control. I'm going to let things happen. And you know what? I'm going to do the hard thing. I'm going to just accept the loss. I'm going to accept every single outcome. That's why I have this saying up here on my chart right here. Why worry over the trade if the outcome doesn't determine success? It's so true. Do you see that now, why I say that? Outcome does not determine success. Your success is your ability to lose small on the trades that, again, you can't control. You're flipping a dumb coin. I don't know if it's going to land on heads or tails. All I know is that I'm going to lose small and I'm going to win big. You control that and you'll get everything that you want. The markets are going to teach you exactly how to be happy in this life. And it's amazing how it works. It's amazing how well that plays out every single time. First reason up here, I'm kind of going backwards, money. People are so scared of money. It's mind-blowing, my friends. If you believe money is hard to get, you are going to really struggle losing it. Which again does what? Makes you not want to lose on a trade, which then makes you go, I can only win on a trade, and then you start to screw up the whole scenario, right? As soon as you start to believe that money is easy to receive, everything changes. You can take a couple losses. Guys, I just took a couple losses on the market. Just happened this week. And am I crying? Am I sad? Am I all this? No, because I've averaged almost an 80% win rate directionally all year long. This is my first swing trade I'm taking a loss on this year. Made money on all of them. And I'll go over those trades if you'd like. Just let me know. So what does that mean? It means I did a really, really good job at winning big all year long. And when the losses came, I did a good job of losing small. Am I trying to make back my money because if I could just make that back, it'll act like it never even happened and then I can go back to being my perfect self again? No, I don't give a crap. I just keep flipping that coin and I keep losing small and I keep winning big. And money keeps coming at me and it's easy to get. Multiple times this year, March, I got it handed to me for like 3 weeks in March, just loss after loss after loss after loss. And on one trade, Amazon, that gap down across support, go back and look at it if you want. That gap and go on Amazon, I made all of my monthly losses back, plus some profits. My month went from red to green in one trade. Money is easy to get. And that's been the truth time and time and time and time again. But the problem is, again, when you lose, everyone just tries to make their money back. Why? You'll make your money if you quit worrying about winning and losing and just keep putting your setup on. Keep putting it on, keep putting it on. You should be trading with a small enough size where it does not matter if you lose, and it really doesn't change your life if you win. That's the type of trading size that you should have on. So when it comes to money, You've got to change this scenario. Money needs to become easy to receive. Once you truly believe that money is just as easy to get as it is to lose, my friends, the truth is you have a 50-50 win rate. We think that money is, it's so easy to lose and so hard to get a win in the markets. It's not true. Mathematically, it's not true. It's a 50-50 win rate, right? So if you're 50-50, that means you're split down the middle. It's just as easy to make money as it is to lose it. So why do our beliefs tell us, man, it's so hard to get a win in these markets? It's not. If you think it's easy to lose, you should also believe it's easy to win. Step number 1, change that, okay? Step number 2 is have the right size on. You should be trading with 1% of your trading account. Why did I blow up my accounts when I was first trying to learn? When I quit my job and started trading full time. Why? Because I was trading more with 40% of my account. I was living and dying with every single trade. I literally just pulling the lottery ticket. I'm either going to lose half my account on this or I'm going to double it, because I had to make $2,000 a week with a $30,000 trading account. I set myself up for failure. If I would have just traded with 1% of my account and been content with $200 a week, man, I would have never blown up that account. Well, it wouldn't have paid my bills. I need $2,000 a week to pay my bills. That was problem number 1, set myself up to fail. But if you can trade with a small enough account, or if you can trade with a small enough percent of your account, there's nothing to worry, because the truth is you are never going to blow up your trading account with a 1% risk of it. If you have a $100,000 trading account and you trade with a $1,000 R, you are never going to lose this account. Mathematically, as long as you have a win rate of 50%, even 45%, it doesn't matter, 40%, you just need to win more than you're losing, right? So 1% of your account. And now you don't have to worry about this. You don't have to worry about losing all your money, because you're only trading with this tiny little baby percentage of it, right? Doesn't matter. Start telling yourself the truth. The truth is money is easy to get. Just as easy it is to lose, it is easy to get. If you think money is hard to receive, which most people do because most people work their entire lives for the little amount that they have because they don't understand how money works, then you are under the impression that money is very hard to get. I've got to work an entire week to make this much money. It's so valuable to me because it's so much of my life just trying to make this much money. And so we automatically think that money is hard to get. Not the case. We've got to flip that, okay? Next portion is set yourself up for success and have the right size on your trades. Because now you can sit there and honestly accept the loss because you know the truth. The truth is this one trade is not going to make me broke and it's not going to make me rich. But I repeat the same process 100, 200, 300 times, and my account is going to go from 20 grand to 30 to 40 to 50,000 to $1 million. All you have to do, small chunks at a time, being patient, and I promise you, you will find success in these markets. Okay? I just information overloaded and dumped as much as I possibly could into this short little time. Are there any questions out there? Do you guys have anything that you want me to go back over? Anything you would prefer me to go over? Let me know in the chat pane. I'd love to help out. I have a few minutes here left. I want to make sure I don't go over my time. But yeah, any questions on those things? Again, happy to review trades, show you what I'm looking at doing. It doesn't really matter to me. I'm happy to help out. I honestly just want to provide value to you. That's it. So
I see a couple of things here for you. Sky says, preach on, Tony. And D Simpson says, do you play gaps of the day or the same stocks each time?
Oh, that is a great question. I do both.
And yeah, and Sky says, let's look at some trades.
Let's look at some trades. Let's go. All right, so I'll answer that question. Yes, I do both. I play gaps. So if I'm doing day trading, I'm looking at gaps. Day trading is all about understanding people's emotions and the sentiment, the kind of feel if we're going up or down. and then how strongly up or down we're going, and you're kind of just catching that ride. That's all day trading is in the simplest of forms, okay? What's the greatest way to know sentiment? Microsoft just had a great gap. What is this gap here? This is a gap that all the bears thought we were rolling down on, and overnight, boom, we gap all the way up to here. If you woke up, if you shorted this thing here and you're like, oh my gosh, this thing is about to go down. Why? Because this is what it's been doing forever. You go up, you go back down, you go up, you go down, you go up, you go down. Here's the next little phase, right? You go up, what should happen? Oh, I'm about to make so much money, and they wake up and go, what? What are the bears going to do? They're going to run for the hills. They are going to buy to close, which is going to make this go up, which means all you have to do is find sentiment like this, jump in on it, and ride that thing to Gloryville. So that's day trading. So I use gaps if I'm day trading. Most of my trades come from Qs and SPY. Okay, so the S&P and NASDAQ. I do a lot of options, but I do a lot of directional trades. I also do a lot of option selling. And let's go over a few trades. Let's look over some of these guys here that I've been doing. All right, so I want to walk you into a few trades that I am looking at currently. Again, this is my own personal stuff. I'm not telling you to do anything. You have your own risk. You do your own things. It is a coin flip like we just talked about. I have no idea if these trades are going to win or if they're going to lose. The only thing I know is that I'm going to lose small if they lose, and I'm going to win big if they win, okay? So when, again, it's a whole nother segment of trying to read these, how to read these things, how I read price action. Again, I have a course on that. I'll show you how to do all of that stuff. If you're interested, email me. I'll get you all that stuff later on. I was buying and loading the boat with puts all through here. And again, this is on a weekly chart, my friends. If you think money is only made on the short time frames, I can tell you I've made stupid amounts of money simply on a weekly and a monthly chart. You just have to be patient and wait for it. And so I was buying puts all through here. It dropped really hard. We got out of our puts here. You notice how we didn't get out at the bottom? I don't know what the bottom's going to be. All I know is that this was a nice support. Take your profits there. I have no idea how low this is going. This made me enough money that I could pay my bills on this one trade for an entire year. Take the entire year off, right? So now what I'm waiting on, I am looking at, we are still in a bear trend in my opinion. We are making lower lows and lower highs. And on this move up, I am starting to leg my way back into puts here, okay? So I don't short shares, and I'll tell you why. Because shares, if you short shares, you are exposed to the upside. If we have news tomorrow that inflation doesn't exist and everything is perfect and the war in Ukraine ends and everything's just great and we gap up to here, it does not matter that you have a stop right here. You are going to get destroyed. Your broker is going to call you up and say, I know you only have $30,000 in your trading account, but you owe me $90,000. Okay, I'm going to sue you, right? Like, that's how the game is played. So for me, I play with options. I buy puts or calls because the most you can lose is whatever you buy and spend on those options. So if I am comfortable to lose $1,000 and I spend $1,000 on puts, the worst thing that can happen to me is I lose $1,000. Okay, so that's why I personally, if I'm holding overnight, now I'll day trade with shares and all that stuff, but I still day trade a lot of options. For me, swing trading, I just sleep better at night knowing that I have a max loss, I'm in control of it, and I know that no matter what happens, I can lose small. Because again, it's all about losing small and winning big. I have already bought some puts here off of this EMA right here, the 20 EMA on a weekly. And by the way, I think we continue to go higher. You can kind of see my spots where I am looking to get into more puts. I'll be adding some more up here around 301, I think, give or take. Yeah, 301. And then I'll be adding a lot more around 305 to 310, a lot more. Those are some of the trades that I am taking. I think that we are going to have a pullback. I'm not sure how low we're going to go. We are probably going to go to anywhere from 290 to 280 and then bounce. That's a possible scenario. Or we actually hit down and we probably make a new low and then rampage back up. So here on the Qs, 240 is my target. if we do roll down, I think we could go to there, and then I'm going to be loading it up on long because I think this bear move is just about done. So that's me. Maybe I'm wrong. Maybe I buy some puts and this thing continues to rampage higher. Totally fine. I've got my risk in place and I am more excited to buy some more puts. Let's say I get into more puts and it keeps going. That's okay. I'm okay to lose that risk. I'm risking a very small percentage of my account. I can't control if the markets go up or down. I can only control what these charts are telling me. And the charts are telling me that we are due for a pullback. And again, I have no idea how steep it's going to be. Maybe it's all the way down to here. Maybe we go to here and we bounce. I don't know. But that's what I'm looking at. So giving you a few easy tips on some of the trades that I'm taking. Again, flip the dumb coin. I have no idea if any of those trades work or not. I don't really care if they do. Losing on a trade doesn't mean anything to me. Winning on a trade doesn't mean anything to me. I can't control that. So why stress over what you can't control? That's personally where I'm at. I have some trades on SPY and all that stuff. So I do trade a lot of these SPY and Qs. That's where the majority of my trades are. But all stocks are on my watch list. Yeah. So I specialize a lot really in credit spreads. That's what I love to do. I currently have a credit spread right now on SPX. So if we throw on SPX, I sold a credit spread all the way up here. Okay. So I win as long as the price stays below this. And by the way, it's got 10 days left on it. It's looking pretty good. In fact, it's up pretty large right now because the probability of us getting up above this blue line is relatively low in 10 days. Can we go higher? Sure, but I don't think we're going to go high enough in 10 days to get there. Is it possible for us to do that? Of course. So I am prepared to, with a hedge plan to be able to buy some calls and make money on the way up to offset my credit spread losses, right? So I've got a game plan. I'm ahead of it. Cool. So that's a few trades that I'm doing right now. I've got bear call spreads on this guy. I am in short on a few other things. By the way, I did buy calls down here. So my calls are up. I am staying in my calls. I'm buying puts, and my calls will keep making me money the higher this thing goes, and I'm going to keep buying puts. So that's currently what I'm doing right now, of how I'm planning on making money and a few of the trades that I'm setting up. But this has been a very, very large bear move, and I believe that we are probably getting close. I do not believe the bottom is in yet. Maybe for the year it's in, but historically we've never bottomed until the Fed pivots and stops tightening, which I don't see happening until next year really. So I think this is all people getting too excited that inflation's cooling off and they're about to get burned. In my opinion, we'll see. And maybe I'm wrong. I don't, again, it doesn't matter. I'm going to lose this much in my account, but if I'm right, I'm going to make this much, right? And that's the only thing you got to worry about. So any other questions? Again, I can't seem to have them pull them up on mine. I'm so sorry, but let me know if there's anything else out there, and then I'll show you where you can reach me.
All right. So, all right. D says, how far out are you buying?
Oh, great question. The simplest way is do like 3 months out, 3 or 4 months out is usually pretty safe, and then buy the option decently close to the money. It's gonna be more expensive, but it's the simpler way to manage your risk for those that are not super inept with options. And even still, that's how I trade them today. I trade a little bit closer to the money, just more conservative, and I give myself some time. So 3 months and closer to the money on those puts.
Right. All right, guys, you got 3 minutes. You have any more questions for Tony?
Anything else you guys want to know? Let me know. I can show you guys a little bit more of where to find me. I'm sure it's already in the link. You guys probably already have it, but
let me see. I should post the link for you, right?
Yeah, there we go. Thank you. I could write it on in there, but in there you can find a lot of my courses. I'm giving you guys all free education. You can click on that thing. There's a tons of free education with real life trading. I know I have a few real life traders here in the audience. Thank you so much for hanging out.
Yeah, thank you.
Yeah, means a lot that you guys showed up.
Here comes the link.
Sweet.
Comes the link. Here comes the link.
There we go.
Oh, look, I brought everything along. Hold on a second. I'm going to go to the page so I can get you guys a URL that will work.
Okay. I appreciate that. Yeah, again, there's enough to get you started there, whatever you want. 90% of our stuff is free. So you can jump on there, go to that link and learn what candles are, learn strategies. We give away hundreds of strategies all for free. Check them out. Hopefully they make you some money. Apply what we just talked about here today, and I know that's going to make you money. It's going to help you out a ton to just forget about the wins and the losses. Stop trying to win on trades and just start accepting the math. Let the math play out. Accept the loss. Biggest thing I can warn and teach you and help you with this to be successful, because like I said, you could have the world's greatest strategy and still find a way to screw it up. So
I really liked it when you said lose small but win big. So that you were, you're talking about it's going to happen, right?
yeah,
So you just have to stack it all so that when you're not going to win, it's got to be a small loss, and when you are going to win, maximize the winning. So
exactly right.
Appreciate
yeah,
that.
thank you so much, and thank you so much for having me here. I do, on one of my courses, there is a price action course, the S curve. I highly recommend getting that for advanced, intermediate, beginners. It doesn't matter. It applies to everyone. It's how I read charts, how I know where I'm wrong, because people's emotions come in where they're like, I don't even know where to get out. Like, how do you know you're wrong, right? If this thing keeps going higher, are we still going to go down, right? Like, at what point are you wrong? And I answer all those questions. I show you how I get into trades where I know I'm wrong at based off of price action. And it just answers so many questions where you should be taking profits. A lot of times people are like, how do you know it's going to get in here? How do you know when to get out there? That S-curve course that's on that link will lead you there and help you out on that. So again, that's a course you can grab, and it's super beneficial and helpful. And again, if you don't find any value, message me and I'll send your money back. Like, I don't really give a crap. So I promise you it will change your life the way you look at charts though. So
That's awesome.
Sweet. Again, thank you so much for having me here. I had a blast. Thanks for your time.
Thank you for joining us, and I definitely hope you'll come back again. Oh, wait, we may have one last question for you.
Definitely will.
Oh, no. Oh, wait. Here we go. Oh, everybody's saying thanks, Tony, Chris, Darian, D.
Yeah.
Carla asked you, though, do you have a trading program?
A trading program. Yes. So with real life trading, you can come trade with us. I'm not sure if that's what you're referring to, but you can jump on reallifetrading.com. I'm there. I'm posting all my trades. You can come trade with me every single day live if you want. So yeah, there's that trading program. I also do a lot of mentor groups where I get a handful of people together. I coach them all together as a group, and I do a lot of one-on-one coaching is mainly what I do. So
Okay.
hopefully that answers one of your questions in there.
Yeah. So Carla, go to his link. I put it in the chat, and go to that link. Then I think you're going to find some good stuff there that you're going to be able to utilize and get some good value from. We also had a question from Kari. Are you sabotaging yourself then if your R is less than 1% of your account?
That's a great question. You're leaving it on the table. So you have to realize that the math is, whether you're risking 0.5% or 1%, you're not going to blow up your account as long as you have a proven 40 to 50% win rate, right? And you let the math play out. You're leaving money on the table, definitely. What I tell people is, if you're trading less than 1%, you're not going to blow up your account, but you will change your life if you can go to 1%. So most of the time I'll tell people not to, if they are still struggling with the emotions. If they are still having a hard time going like, look, I'm struggling losing $1,000 like that, then we need to dial it back until you can prove to your brain that once you trust the math of like, okay, I get this, I'm not going to blow it up. Yeah. Once you believe that and truly trust that, and you're implementing that with a smaller size, then yes, you can now go to a bigger size and realize that the math is the same. Control those emotions because it doesn't really matter. So,
did you find it really hard to remove the whole gut essence of doing things? I mean, you keep saying trust the math, because to me, trusting the math means you take your gut right out of it.
Yeah. you'll see intuition coming in by just reading sentiment. When you get really good at reading sentiment, you'll start to see like, wow, that just feels weak. That candle should have been much stronger, right? I play
Okay.
that. So that's separate from a gut, but for me, once I back traded thousands of times on a strategy and I was so confident, it did take out the gut instinct to just be like, I'm just going to jump in this trade because I feel like it's about to go down, but it's not necessarily my setup, right? That type of gut instinct to me has never made me money over 100 trades. Again, some people can be profitable with it, but realistically, I guarantee you their gut's kicking in on a plan that they've already traded thousands and thousands of times and know intimately, right?
Yeah,
Or
yeah.
you understand the math. If you can keep the math in your favor of losing small and winning big, then that could play out. But for the most part, 98% of the people that trade cannot control their emotions enough to
Yeah.
play off of their gut feeling or instinct. And so that's
Okay.
why having the security, you've got to calm your brain down with knowledge. And knowledge comes from, this strategy is proven 50%. I know I can make my money with this. I know I can lose small and win big if I just follow my strategy rules. And that brings peace and comfort when it comes time to put money on the table. So I usually recommend follow the plan, follow the math, and it makes it a little bit easier.
Yeah. I think that comes under the heading of unacknowledged expectations. People expect certain things that they don't even realize they expect, and then that hurts when it's not what it was expected.
Yes,
So,
correct. I
all
never had a
right.
chance
Well,
to get into expectations, but that is a huge factor. I thought you had to have like a 98% win rate to be successful. So when I had
oh,
50%, I almost quit. And my
oh,
mentor's like, you're doing just fine. I was like, what? No, I'm a loser. I would have quit trading. I had a 50% win rate. So expectations are huge. Sorry, I didn't mean to cut you off, but yeah.
that's huge. No, you didn't. That's fantastic.
Yeah.
All right. Well, I don't want to keep you. I know you got something else you got to do today. I really appreciate you being here, and I do hope you'll come back again. We are going to change up the format a little bit. We are going to have much more in advance done. So I appreciate you jumping in at the last minute like that. It was really fantastic. And I hope everybody here had a great time. And thank you very, very much. And I hope you have a wonderful holiday season.
Thank you so much. My pleasure. Thanks for having me. Appreciate it.
All right. Bye now.
Yeah.
All right, folks, we did it. Here we are. It's time for us to say goodbye. I just want to show you one more thing. Let's get this off your screen. That was Tony Pawlak with Real Life Trading. And go take advantage. Go check out his page. All of the speakers today have been fantastic, and I appreciate everyone who stayed to the end. I appreciate my speakers coming in, and I just want to say from Traders Exclusive, our team here, we just really appreciate it when you guys do come. And let's see, are you guys seeing a screen? Yes, you are. All right. So this was a presentation of Traders Exclusive. You can catch us on twitter.com @ or at options_info, and tradersexclusive.com, of course, is where the recording is going to be posted. Much appreciation to everybody for being here, and from me and everyone at Traders Exclusive, trade well. We hope you'll join us at the next Traders Exclusive Live Strategy Series event, which is going to be on December 7th. Thank you and trade well. Bye-bye.